check check sound இன்னும் கொஞ்சம் அதிகமாக்கணும். check check hello hello சரி check check இப்போ 6னா 6 பேர் ஆன்லைன் இருக்காங்க. இல்லை இது வந்து ஒரு சைடில் ஓப்பன் பண்ணிவிட்டு அந்த இது ஓப்பன் பண்ணிடுங்க OBS. இது மினிமைஸ் பண்ணி இது ஜூமில் இருக்குல்ல, ஜூம் கம்மி பண்ணிக்கலாம். ரைட் எஸ் இல்லை அங்கே இருக்கட்டும் மவுஸ் ஃபர்ஸ்ட். check okay. Good morning everyone. Please close your eyes for 2 minutes. Open your eyes. Okay. So yesterday we had completed the tax rates, basic concepts, residential status, and I took an introduction, a little bit of house property. Let us continue with house property now. After completing house property, we will go on and continue with salary. In between, wherever time is there, I will try to revise whatever we have already studied. So income from house property. Yesterday I told you that any head of income, all the heads of income have a charging section and a computation section. In house property head of income, the charging section is section 22 and computation section is section 23. What does the charging section say? It says that number 1, there should be a house property. Number 2, the assessee should be the owner of the house property. And number 3, the house property should not be used for assessee's own business or profession. Then we saw the meaning of house property. House property means building or land appurtenant thereto. Building means what? A constructed permanent structure, and land appurtenant means the land attached to the building, like parking, swimming pool, garden, etc. There are two types of house property: let out property and self-occupied property. Before that I told you what and all are not covered under house property. Number 1, assessee is using for own business or profession, and number 2, if assessee is engaged in the business of letting out of commercial property. So if business of letting out of commercial property is there, it will be covered under PGBP chapter. However, if business of letting out of residential property is there, it will be covered under house property chapter. Sir, what if it is a commercial property but not the business of the assessee? In such case also it will come under house property. Purida? Only if it is the business of commercial property letting out, then only it will go to PGBP. In all other cases, the house property will be covered under house property chapter. So two cases: let out property, self-occupied property. Self-occupied property means what? The assessee himself is occupying the property. Can there be more than two self-occupied property? Definitely yes. For example, I am having 4 houses, and in all the 4 houses I am living for a few days during the year. It is very much possible. But if there are more than 2 self-occupied property, any 2 self-occupied property can be claimed as self-occupied, and balance properties will become deemed to be let out property. It is a notional income where on the notional rent the assessee has to pay the tax. Then let out property means what? Property given on rent. Then we saw the meaning of owner. I told you that the owner is the person who is entitled to receive the income. It need not be there, it is not necessary that a sale registration is there against his name. That we also learnt in the deemed owner concept. We are concerned only about the owner of the building, not about the owner of the land, because the building is only house property. If there is a disputed property, ownership will be decided by the income tax department. Then we saw the deemed owner concept, section 27, 6 cases. Number 1, if I transfer my property to my spouse without or for inadequate consideration, I will be the deemed owner. Exception is agreement to live apart. Number 2, if I transfer my property to my minor child without or for inadequate consideration, then also I will only be the deemed owner. Exception is transferring to minor married daughter. Number 3, if there is a holder of an impartible estate. Yesterday I gave you an example of an AOP. There are two brothers A and B who are joint owners of the property, and we do not know what portion belongs to A, what portion belongs to B. Hence A and B both are considered as an AOP and then taxed. This AOP is only the holder of the impartible estate. Similarly, if there is a HUF, the property might not be in the name of the HUF, the property might be in the name of some family member. However, HUF is holder of the property. Next, member of cooperative society, company, etc. Sometimes what happens, housing societies are in the name of the company or cooperative society, whereas the people who are living inside the flats are the shareholders or the members. In income tax, these shareholders or members are only considered as the deemed owner. Next, if a property is transferred, if a property's possession is transferred as per the Transfer of Property Act, then the person who is receiving the possession will become the deemed owner. There 3 conditions should be satisfied. Number 1, possession should be handed over to the buyer. Number 2, sale consideration is either paid or promised to be paid. And number 3, even though sale deed is not executed, but some other document should be executed. If these 3 conditions are satisfied, then if I receive the possession itself, I will become the deemed owner. Next, if a person receives right to property for at least 12 years, he will become the deemed owner. So now we know the ownership concept. Next is what concept? House property is over, ownership is over. Now we will jump to the computation section. How to compute income from house property? This is a standard format which is given in the Act itself, a standard format where first we have to compare the municipal value and fair rent, whichever is higher. Then higher value and standard rent, whichever is lower, we will get the expected rent. Expected rent we should compare with the actual rent, we will get the gross annual value. Whichever is higher will give us the gross annual value. Then reduce municipal taxes, you will get the net annual value. From there you can reduce 2 deductions. Section 24A standard deduction at 30%. Section 24B interest on housing loan. After reducing these 2 deductions, you will get income or loss from house property. Simple format. Now for self-occupied property, since there will not be any rent received, that is why no calculation is to be done. Only one aspect is there, that is interest on housing loan. Interest on housing loan is allowed as a deduction even for self-occupied property, but that too only in case of old scheme. In case of new scheme, if there is a self-occupied property, there will not be any income, the income will be 0. In old scheme, interest on housing loan is also allowed as deduction, hence there will never be income from house property, but there can be loss from house property in case of self-occupied. Then in case of deemed to be let out property, you will see all the columns are filled in, but all the rows are filled in, but there is only one row which is empty, which is what? Actual rent. Because it is deemed to be let out, there will not be any actual rent, but other than that, the entire calculation will be the same as let out property. Now let's see the meanings of the terms quickly. Number 1, what is municipal value? Municipal value is the value which is determined by the municipal authority. For example, Chennai Corporation is there. If there is a property within the corporation limit, the corporation will decide the value. Next, fair rent or reasonable rent is a rent of a similar property which is located in the same area. What is standard rent? Some places where the population is very high, that is why demand will be high. Since demand is high, the rates also will be high. So to control the rates, in some places there will be a Rent Control Act. So whatever is the maximum rent fixed by the Rent Control Act will be called the standard rent. Then actual rent. What is actual rent? Rent received. How to calculate the actual rent? Rent received plus rent receivable minus unrealized rent. Rent received plus rent receivable minus unrealized rent. But to reduce this unrealized rent, that is rent not yet received, you have to satisfy 4 conditions. Rule 4, 4 conditions. These 4 conditions are given in Rule 4. What are the 4 conditions? Number 1, the tenancy should be bona fide. It means what? The tenant should actually be staying in the house of the landowner. It should be original tenancy, not a fake tenant where he is not at all staying in the house, just like that he is paying the rent. Second, tenant should not be occupying any other property of the assessee. So in one house there is unrealized rent, but in another house you are allowing him to stay. That should not be allowed. Next, either tenant should have vacated the property or steps should have been taken for him to vacate the property. The owner should have given him at least one notice to vacate the property, legal notice. Next, reasonable steps should be taken to recover the rent. So these 4 conditions should be satisfied. If all these 4 are satisfied, only then the assessee is allowed to reduce the unrealized rent from the actual rent. Generally in your examination, I have not yet seen a question where these 4 conditions are not satisfied. If at all the question does not mention about these 4 conditions, you have to assume that Rule 4 conditions are satisfied. Now let's come to municipal taxes. Municipal taxes are the taxes which are collected by the municipal authority. It can be property tax, house tax, water tax, local tax, sewerage tax, drainage tax, by whatever name called. Corporation is getting the tax in respect of that property. It means it is municipal tax. Then, if municipal tax is paid, it should be paid by the owner and not the tenant. If the owner pays the municipal tax, the owner can claim deduction. But if the tenant pays, can owner claim deduction? Answer is no. If tenant pays, owner cannot claim deduction. Next, allowed fully on payment basis. Allowed fully on payment basis. So what is the meaning of this? Listen, let's say in previous year 24-25, in previous year 23-24, I did not pay any municipal tax at all. So in previous year 24-25, I paid the municipal tax of previous year 23-24 also and previous year 24-25 also. Let's say this is 10,000 and this is 10,000. Total amount is 20,000. So how much will be allowed as deduction? Answer is 20,000. It does not matter for which year you are paying the municipal tax. Whatever municipal tax you are paying, it will be fully allowed as deduction on payment basis. But in previous year 23-24, will you get any deduction? Answer is no, you will not get, because you have not paid. If you have paid, you will get the deduction and fully you will get the deduction. Does not matter for which year you are making the payment. That is why allowed fully on payment basis. If municipal tax is given as a percentage in the question, then take the percentage of what? Municipal value. It is a percentage of municipal value. If property is outside India, then the taxes which are levied by the respective country will be called municipal tax. No municipal tax deduction is allowed if GAV is 0. So if GAV is 0, you cannot reduce municipal tax. Municipal tax is only allowed up to GAV. Purida. Because of municipal tax, you will never have loss in house property. Okay. Now let's come to standard deduction. Section 24A, standard deduction. What is the standard deduction? It is nothing but flat 30% of NAV. Flat 30% of NAV. Why is this standard deduction given? Because no other expense related to house property is allowed under this house property head of income. Like repair, maintenance, plumbing, painting, etc. Nothing is allowed. Insurance is also not allowed as a deduction. Why is it not allowed? Generally, what happens is, relating to house property, if you are incurring any expense, that expense is incurred in respect of an unorganized sector. For example, if a mason is coming to your house and he is doing the repair work, generally he will not give you a valid bill. He will just tell you the amount and you will pay the amount. That is why, since the proof is not there, it is difficult to claim the expense. That is why a standard 30% is allowed as a deduction. Whether you incur any other expense or not, standard 30% is allowed. Now, section 24B is interest on housing loan. This interest on housing loan, only one special aspect is that it is not allowed under section 115 BAC for self-occupied property. But for let out property, it is allowed in old regime also, it is allowed in new regime also. Only for self-occupied property, the restriction is there. Now, what are the points? Number 1, the loan should be for acquisition, construction, repair, renovation or reconstruction of the house property. Acquisition, construction, repair, renovation or reconstruction. Unpaid purchase price can also be treated as loan. Sir, what is this unpaid purchase price? Mr. A has purchased a property from Mr. B. Okay. So, Mr. B has given the property. Now, Mr. A has to pay rupees 1 crore to Mr. B. But A is having only 30 lakh rupees. Hence, he pays 30 lakh rupee initially and he tells, please convert the balance 70 lakhs to a loan. Convert the balance 70 lakhs to a loan. I will pay you this balance 70 lakhs slowly by way of EMIs along with interest. So, this 70 lakhs which is the unpaid purchase price, this is nothing but unpaid purchase price. This also can be treated as housing loan under house property head of income. Even loan taken to repay the above loan can be treated as housing loan. For example, I might have taken a loan from Standard Chartered Bank, but now I feel that the terms are not favorable. That is why now I take another loan from SBI, housing loan. I repay the Standard Chartered loan and now this SBI housing loan I want to continue. In such case, SBI housing loan will also be treated as housing loan under house property head of income. Then loan can be taken from anyone. So, not only banks, loan can be taken from friends also, it can be taken from relatives also, does not matter. Next, interest on interest is not allowed as deduction. If a person is not able to repay the loan on time, additional interest is levied, correct? This additional interest is not allowed, only the original interest is allowed, and interest is allowed on accrual basis. So, here totally different concept from municipal taxes, because here interest is allowed on accrual basis. So, previous year 24-25, if the interest is 1 lakh but I paid only 80,000, how much will be allowed? 1 lakh, the entire amount will be allowed. So, doesn't matter if I have paid the interest or not paid the interest, it will be allowed as deduction. So, municipal taxes fully allowed on payment basis, interest only allowed on accrual basis. Next, interest on loan, if it is taken from outside India, it is compulsory to deduct the TDS. If TDS is not deducted, then interest will not be allowed as deduction. Limit of interest. Now, for let out property or deemed to be let out property, if you are claiming interest as a deduction, there is no limit. Whatever interest has accrued, it can be claimed as deduction. It can be 4 lakhs, 5 lakhs, 10 lakhs, does not matter, not a problem at all. But when it comes to self-occupied property, and here also we are only talking about old scheme, because new scheme interest is not at all allowed. In old scheme, interest is allowed but subject to limits. What are the limits? The limit is 30,000. The maximum interest that can be claimed is 30,000. However, if 4 conditions are satisfied, the limit will be increased to 2 lakh rupees. So, in self-occupied property, maximum interest that can be claimed is 30,000. But if 4 conditions are satisfied, the interest can be increased to 2 lakh rupees. What are the 4 conditions? Number 1, the loan should have been taken for purchase or construction. Number 2, the loan should be taken on or after 1/4/1999. In your study material, one question is there where one loan is taken before 1/4/1999. In such case, you should provide only 30,000 as the maximum interest deduction. If it is a case of construction, the construction should be completed within 5 years from the end of the year in which loan is taken. Next, certificate of interest should be taken from the loan provider. So, the person who is giving the loan you should ask that person for a certificate of interest. For example, if I have taken a loan from State Bank, I should get a certificate of interest from State Bank of India as a proof. Okay. Generally in questions, nothing is mentioned about this certificate of interest. Hence, it is our responsibility to assume that certificate of interest is also received from the loan provider. Hence, all the conditions are satisfied. That is why we are taking higher limit of 2 lakh rupees. In some cases, mark will be allotted for assumption. In some cases, marks are not allotted for assumption. But better to provide the assumption. So, but listen here, this 2 lakh rupee and 30,000 rupee limit is there, no? This limit is both per property as well as per person. Per property also, per person also. Inga konjo confusion varu. Because combined limit also 2 lakhs is there. Let's say I am having two properties. In one property maximum limit is 2 lakhs. One property maximum limit is 30,000. Both combined maximum limit is 2 lakhs. So more than 2 lakhs I can never claim interest as deduction. Let us write an example. So in the space you have, no, on the side, I hope you have space. So there in small words I want you to write. Done. So interest deduction is per person as well as per property. Per person also, per property also. I give you an example. Condition satisfied for self-occupied 1 but not satisfied for self-occupied 2. Self-occupied property 2. Just a second. In this example 2 is there, no? This is not satisfied for both. Not satisfied for both. Example 2, not satisfied for both. So in example 1, conditions are satisfied for self-occupied property 1 That is why the maximum interest that can be claimed is how much? 2 lakh rupees. For self-occupied property 2, conditions not satisfied. Hence maximum interest that can be claimed is 2 lakhs. But both combined maximum interest is how much? 2 lakhs. 2 lakhs. It can never go beyond 2 lakhs. In example 2, conditions not satisfied for both self-occupied property. So first one 30,000, second one 30,000. Now both combined how much? 60,000. Answer is no. It is 30,000. Since conditions are not satisfied, that is why maximum 30,000 only can be claimed. So combined limit itself is 30,000. This is where confusion arises. But I told you that it is per person also. Let's say there is one house property where 4 conditions are satisfied. All the 4 conditions are satisfied. So maximum limit of interest is how much? 2 lakhs. Correct? Now can this 2 lakh become 4 lakhs? Answer is yes. This 2 lakh can become 4 lakhs in case of co-owners. Co-owners. So if there are 2 owners of the property, each owner will enjoy 2 lakhs limit. So for owner 1 also 2 lakhs, owner 2 also 2 lakhs, both combined 4 lakhs. Hence it is per person also, per property also. Next, interest for pre-construction or pre-acquisition period. Let us draw a timeline with which we will be able to understand better. I want you all also to draw. Be quick. Done. So interest for pre-construction or pre-acquisition period. If there is a pre-construction or pre-acquisition period, pre-acquisition or pre-construction period means the period before the year in which the acquisition or construction got completed. Okay. So for this period also interest is allowed as deduction, but interest is allowed in 5 equal annual installments. 5 equal annual installments. Now I have given you an example over here. The loan was taken on 1st of August 2020. Construction got completed on 31st July 2024. So what is the pre-construction period? From 1/8/2020 to 31/3/2024. So it is before the year in which the construction got completed. Here is where the confusion arises. People will think that this 30,000 is also pre-construction. 30,000 is not pre-construction because pre-construction is before the year. So if construction got completed, even if it was the last date of the previous year, still the entire year interest will be treated as normal interest and not pre-construction interest. So in our case it is 5 lakhs. The pre-construction interest is 5 lakhs. Normal interest is 1 lakh 10,000. So this 1 lakh 10,000 will be allowed as deduction, and this 5 lakhs also will be allowed as deduction in 5 equal annual installments. So how much will be allowed as deduction? 5 lakhs divided by 5 is equal to 1 lakh. So this total interest deduction is how much? For normal interest 1 lakh 10,000, pre-construction interest 1 lakh, total 2 lakhs, because it cannot cross 2 lakhs. It cannot cross 2 lakhs. But in let out property it can cross 2 lakhs. Fine. I am talking about self-occupied. Self-occupied it cannot cross 2 lakhs, but in let out it can very much cross 2 lakhs also, not a problem. Whatever pre-construction period interest is there, divide by 5, entire amount you will be able to claim in let out and deemed to be let out property. You clear with interest concept? Okay. Now let us solve a question. Illustration 4 in your study material. If you are having your study material, you can refer it. If you are not having, no problem. You can see the board also. So I want you to solve this question. Take your notebook, solve this question, and put the entire format. Karna, even if some figures are missing, let's say municipal value is not there, so directly you are supposed to take standard rent, correct? Municipal value fair rent is not there, so directly you can take standard rent as expected rent. But I want you to write everything. Write municipal value also, put nil, then fair rent nil, higher amount nil, then you write standard rent. The format I want you to draw for each and every question. So first solve this question quickly, easy only, and then we will discuss. நான் சொன்னேன் இங்க உள்ள இருக்கு, இதுக்கு மேல வச்சா அப்பதான் இது முட்டும்னா என்னங்கண்ணா அதான் இல்லை பட் இப்போ லைவ் கேட்கும்போது இயர்ஃபோன்ஸ் வச்சா கேட்கும், பட் வேணும் விதவுட் இயர்ஃபோன்ஸ் கொஞ்சம் கஷ்டமாக இருக்கும். செக் செக் செக். இல்லை இந்த செட்டிங்ஸில் போங்கன்னா ஃபில்டரில் எதுவுமே பண்ண முடியாது. டிவைஸும் கரெக்டு தான். இதில் போங்க, இதில் ஆப்ஷனில் போங்க, வேறு ஏதோ வருது அட்வான்ஸ் ஆடியோ ப்ராப்பர்ட்டியில் இல்லை இல்லை, இது லெஃப்ட் ரைட் பேலன்ஸ் இது வேணும். இதில் தான் இஷ்யூண்ணா. இது என்ன போயாவா? என்ன மைக்கு? இல்லை மைக்கில் பேட்டரி லோ ஆயிரும்னா அப்படி ஆகும். இது பேட்டரி மைக்கா இல்லை பவர் மைக்கா? செக் 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 செக். இல்லைண்ணா வாய்ஸ் நார்மலாகவே கம்மியாக இருக்கு. ஆமாம், ரெட்டில் வரணும், பட் வர மாட்டேங்குது. செக் செக் செக். இப்போ நான் நார்மலாக பேசும்போது எல்லோவில் இங்கே வரும். ம். ஹலோ ஹலோ, இங்கே பாருங்க. ஹலோ ஹலோ ஹலோ. இந்த அளவுக்கு வச்சா கூட வர. இதில் மவுஸ் கொடுங்க. இந்த சிஸ்டமில் தானே ஒர்க் ஆகிட்டு இருக்கு, ஓபிஎஸ் ரன் ஆகிட்டு இருக்குது. எழுதிட்டு இருக்கேன். ஒரு நிமிஷம். சவுண்டு மைக்ரோஃபோன். இப்போ இதுதான் போயிட்டு இருக்குது. இதில் வந்து மேனேஜ் சவுண்ட் டிவைஸ் ப்ராப்பர்ட்டி. இங்கே பாருங்க. இப்போ செக் செக். செக் செக். ஹலோ ஹலோ. ஓகே, பண்ணியாச்சாண்ணா? ட்ரான்சிஷன் பண்ணியாச்சு. ஓகே, டன். Anirudh has a house property whose municipal valuation is 1,30,000 per annum. Parent is 1,10,000. Standard rent is 1,20,000. ஒரு ஃபார்மேட் வரைஞ்சிடலாம் குவிக்கா. Computation of income from house property of Mr. Anirudh for assessment year 25-26. So should we write heading like this in the examination? Definitely yes. So first what we will write? Municipal value. I am writing here in short forms to be quick, but in exams you are not supposed to. Municipal value, fair rent, whichever is higher or standard rent, whichever is lower will give you expected rent, then actual rent will give you GAV less municipal taxes give you NAV minus section 24A standard deduction at 30% minus section 24B interest on housing loan or borrowed capital. எப்படி வேணா எழுதலாம், பிரச்சனை இல்லை. ஃபார்மேட் வரைஞ்சு வச்சுக்கலாம். சார் ஒர்க்கிங்க்கு ஸ்பேஸ் இல்லைன்னா என்ன பண்ணுறது? ஒர்க்கிங் நோட் போட்டுருங்க. ஸோ நம்பர் 1 முனிசிபல் வேல்யூ 1,30,000. Parent 1,10,000. 130. Standard rent 1,20,000. So expected rent is 1,20,000. இங்க அவுட்டர் காலமே தேவையில்லை. சார் இப்படி இருந்தா என்ன பண்றது? எக்ஸாம்ல வந்து இன்னர் காலம்லயே போட்டாச்சு, அவுட்டர் காலம்ல எதுவுமே போடல. நோ ப்ராப்ளம், ரொம்ப யோசிக்காதீங்க. Actual rent. Now actual rent, no, it involves calculation. You can directly do the calculation, but I prefer working note. Working note. Actual rent is equal to rent received plus rent receivable minus unrealized rent. If at all you feel that the words are going out of the screen, please let me know then and there, because my screen is larger. The screen visible here is a shorter portion, smaller portion. So here what you should write? 11,000. Rent received is 11,000 for how many months? 12 months. Previous year. Unrealized rent was 11,000 and all conditions prescribed by rule 4 are satisfied. So here the rent received is how much? Only 11 months rent. 11,000 multiplied by 11 months plus 11,000 multiplied by 1 minus 11,000 multiplied by 1. Correct? Why are we doing this? Because listen, let's say rule 4 conditions are not satisfied. In such case, you should not take directly, you should just ignore this part and the entire amount will be the actual rent. That is why important to do this type of calculation. You are telling them that we are actually reducing the unrealized rent because the rule 4 conditions are satisfied. So in this case, what is the total amount? 1,21,000. Then here you should put a note. Unrealized rent is reduced since the condition in rule 4 are satisfied. Rule 4 are satisfied. So like this, then this 1,21,000 you take here. So expected rent or actual rent, whichever is higher, correct? 1,21,000 minus municipal tax. Is it given in question? 10% of municipal value. Can we calculate here? Yes. 1,30,000 multiplied by 10%. So 13,000. What is the NAV? 8,000. Then what is the standard deduction is 30%. How much? 400. Interest on housing loan? Irka? 40,000. Total 35,600. So what are the things to keep in mind? My recommendation for your examination: number 1, even if some figures are missing, still write everything in the format. Number 2, please write the heading properly. Number 3, when it comes to actual rent calculation, I want you all to write actual rent received plus receivable minus unrealized, so that if at all unrealized rent rule 4 conditions are not satisfied, you are not making the silly mistake of reducing the unrealized rent. And then you can write a note that we are reducing it because the rule 4 conditions are satisfied, to address the point that you actually have the knowledge that only if it is satisfied you are supposed to reduce. If you are not writing this, the examiner will not know whether you actually know about rule 4 conditions or not. So this question is over. Now let's move to the special aspects. Quickly let us cover. So what I am going to do now is I am going to brush up all the special aspects one by one. The normal computation of house property is complete. That is very, very simple. Will that come in examination? 99.9% it will not come in examination. What sum we solved right now, might be it can come in MCQ, but it will not come as a regular question. If a regular question comes, it will definitely come with some adjustment or the other. So all these adjustments, let us all study together, and then we will solve how many ever questions possible given the time we have. First special adjustment is vacancy. Vacancy means what, Kanna? Vacancy means house is empty. It is available for rent, but no tenant has occupied. Vacancy means house is available for rent, but no one has occupied. சொல்லுவாங்களே to let board போட்டிருக்கு. To let board will be there, but no tenant has occupied the house. This is called vacancy. So since the house is vacant, it is not the landlord's mistake. He wants to give it on rent, but he is not able to give it on rent because no tenant is coming and occupying the house. That is why benefit should be given for vacancy. What is the benefit given? While doing the calculation of income from house property, we compare expected rent and actual rent, correct? While comparing expected rent and actual rent, in vacancy case, what you should do? You should compare expected rent with actual rent plus vacancy rent. Actual rent plus vacancy rent. Expected rent, actual rent compare பண்ணுவோம். அதுக்கு பதிலா என்ன பண்ண போறோம்? Expected rent actual rent plus vacancy rent கூட compare பண்ண போறோம். Fine. If whatever is higher, you are going to find out. If expected rent is high, take expected rent as GAV. But if actual rent plus vacancy rent is high, don't take actual rent plus vacancy rent as GAV. You take only actual rent as GAV. Compare பண்ணும்போது vacancy rent add பண்ணணும். ஆனா final answer எழுதும்போது actual மட்டும்தான் எழுதணும். புரியுதா? So if actual rent is greater, then if expected rent is greater, then expected rent is GAV. Then if actual rent plus vacancy rent is greater, then actual rent is GAV. Basically, the government is telling, or the Income Tax Act is telling, that had vacancy not been there, this actual rent plus vacancy rent means what? It means had vacancy not been there, if still expected rent would have been higher, then you take expected rent itself. Okay. Had vacancy not been there, if actual rent would have been higher, then I will give you the benefit of vacancy. You can take only the actual rent. If you understood, not a problem. If you did not understand, go by this framework. So while comparing, you are comparing along with actual rent, but while taking the final answer, you are taking only you are comparing along with actual rent plus vacancy rent, but while taking the final answer, you are only taking the actual figure. When we will solve a question, you will be even more clear. Next. So there are more than 2 self-occupied properties. I told you, if there are more than 2 self-occupied property, then any 2 can be claimed as exempt. Balance should be deemed to be let out property. Now, as a chartered accountant, it is our responsibility to calculate and show to the assessee that which 2 properties can be claimed as exempt and which can be claimed as DLOP, so that the tax liability is minimum. Hence, if there are more than 2 house self-occupied property, you have to do permutation combination method. It means what? If there is property 1, 2 and 3, what you will do? Let's say 1 and 2 are self-occupied, 3 is DLOP, what will be the answer? Then 2 and 3 are self-occupied, 1 is DLOP, what will be the answer? 1 and 3 are self-occupied, 2 is DLOP, what will be the answer? Then where the income is least, that is the most beneficial answer. Fine. We will see this question, how it is solved in the study material. You will be even more clear. Partly LOP and partly SOP area wise. So in one house, in the same house property, some portion is let out and some portion is self-occupied. In such case, what to do? Treat both the portions as different house property and solve the question. One portion is let out, one portion is self-occupied. So let out portion should be treated as let out property. self-occupied portion should be treated as self-occupied property. So what you should do, divide the municipal taxes, municipal value, taxes, etc. everything on area basis, but you should not divide actual rent, because actual rent only belongs to the let out portion, hence actual rent you should not divide. Next, partly let out, partly self-occupied, time wise. It means what? For some time of the year it was let out property, for balance time of the year it was self-occupied property. In such case, treat it as a let out property and solve the question. Treat it as a let out property and solve the question. So even if rent was received only for 1 month, what will happen? Actual rent will be only 1 month rent. Expected rent will be 12 months rent. Obviously expected rent will be high. So it is a loss for the assessee. But that is how the provision is. But listen, in the same case, let's say interest deduction is there. Even though the assessee stayed for 11 months as self-occupied, 1 month it was let out. 1 month it was let out. But the entire interest she can claim as it is, as if it was let out property. Hence, even if the interest is 5 lakhs, she can claim 5 lakhs as deduction. புரியுதா? இங்க வேணா எழுதலாம். Check. Okay, entire interest. You understood the point? So for part of the year it was let out, for balance part of the year it was self-occupied. Now then treat the entire year as let out and solve the question. Right? Next, property acquired in between the year. Property acquired in between the year. In such case, what to do? Take municipal value, fair rent, etc. on proportionate basis. So if property is there with the assessee for 8 months, then you take only 8 months municipal taxes, 8 months fair rent, 8 months standard rent, etc. Don't divide municipal taxes because it is fully allowed on payment basis, and don't also divide interest because entire interest expense was borne by the assessee and it is allowed on accrual basis. So full year interest will be allowed. Okay, municipal taxes, entire amount paid by the owner will be allowed. Interest also will be fully allowed. Interest fully allowed, municipal taxes also fully allowed. Balance everything you have to divide on proportionate basis based on the number of months. Purinjadala. Next, section 25A, arrears of rent or unrealized rent. Arrears of rent or unrealized rent na enna? Arrears of rent means rent was under dispute and now later on it is received. Disputed rent of the past received during previous year. Disputed rent of the past received during the previous year, that is arrears of rent. And unrealized rent, we have already seen that if rule 4 conditions were satisfied and if unrealized rent was reduced but later on such rent is received, then that rent will become income. Purida, listen carefully. If rule 4 conditions were satisfied and unrealized rent was reduced, so ரெண்டு வருஷத்துக்கு முன்னாடி rule 4 condition satisfy ஆயிருக்கும், நீங்க rent reduce பண்ணிருப்பீங்க, ஆனா இப்போ அந்த rent receive ஆயிருச்சு, so now you should treat it as income, correct, because already it was reduced. But listen, what if rule 4 conditions were not satisfied and rent was not reduced, then should we treat it as income now? Answer is no, because since it was already taxed earlier, why to tax it once again? Purida? So earlier if it was reduced while calculating the actual rent, now you have to treat it as income. But it was not reduced earlier, no need to treat it as income because it was already treated as income. So when is it taxed? In the year of recovery. Both arrears of rent and unrealized rent, both are taxed in the year of recovery. The year of recovery means what? In the year in which the owner is receiving the arrear or unrealized rent. Even if assessee is not the owner, so while receiving the unrealized rent or arrears of rent, it is not necessary that the assessee is the owner of the property. In that year, he should be the owner, the year for which the rent belongs. But now if he is receiving the amount, he need not be the owner. Still it will be taxed under house property head of income. So what is the taxable amount? 70%. Why 70%? 30% standard deduction. Standard deduction. And here also similarly, no expense will be allowed even if it is related to recovery. So only standard deduction is allowed. No other expenses are allowed against arrears of rent and unrealized rent. Next, joint ownership or co-ownership. Joint ownership or co-ownership. Now there are two types of joint ownership or co-ownership. First type the share is definite and ascertainable. Second type the share is not definite and ascertainable. Second one we will discuss first. If share is not definite and ascertainable, I had already told you that both the co-owners together will be treated as AOP, and this AOP will be taxed separately. But AOP taxation is not a part of your inter syllabus, it is a part of final syllabus. So this one you are not going to learn. CA final. In your inter syllabus, we only have the case where share is definite and ascertainable. You know which co-owner has how much share in the property. In such case, if it is a let out property or deemed to be let out property, then calculate the income from house property as if the entire property is only belong to one owner. Entire property belongs to one owner, means normally calculate, and at the end the final answer is there, no, that you divide into ownership ratio. Very, very simple. Don't calculate for every co-owner separately. Calculate only once and then divide it into ownership ratio. But if it is a self-occupied property, then you have to calculate separately because every owner is getting the interest limit benefit. The 2 lakh rupees is there, no? Every owner will get the benefit of 2 lakhs. Hence you have to calculate separately. Then last concept is composite rent. Composite rent is not that important from the examination perspective. Still we will have a small discussion. What is composite rent? Composite rent means that in the same rent amount, rent of house property is also there. Rent of some other asset is also present. For example, I am giving my house property. I am also giving furniture. I am also giving washing machine. I am also giving AC. For all of them, I am collecting a single standard rent. This is called composite rent. Now in composite rent, first you should ask the question, is it possible to let out the property without the additional asset? Is it possible to let out the property without additional asset? For example, if I am a flat owner, I only give flat on rent, but I don't give any bed, furniture, etc. on rent. Is it possible? Yes, it is possible. Let's say I am a hotel owner. and I am giving only room on rent, but in that room there is no bed. Is it possible? No. Is it not? It is not possible. That is why in case of hotel, the entire rent will be treated as PGBP or income from other sources, as the case may be. But if it is possible, then you have to see whether the agreement is separable or not separable. It means what? In the agreement, I should have written that for the house rent is this much and for the other asset rent is this much. In such case, house or rent treated under house property, then other assets or rent treated under PGBP or income from other sources. But agreement la separate kudukalana enna pandrathu house property la kondu vara mudiyadhu. Take it to PGBP or other sources. So if it is yes, then split income into house property and PGBP IFOS. If no, entire rent is taxable under PGBP IFOS. Fine. This concept is there, theoretical concept. Practically, it does not come in the examination. Now let us solve a few questions. Then we will wind up house property and move into salary head of income. First and foremost, illustration number 10. Very simple question, hardly 2 to 3 minutes. I want you to all to read the question first, solve it quickly, then we'll discuss the answer, move to the next one. First solve the question in your notebook. This question is related to unrealized rent and recovery of unrealized rent and recovery of arrears of rent. Online class la இந்த பக்கம் கட் ஆகுது screen, இங்க வந்து இந்த பக்கம் அந்த பக்கம் கட் ஆகுது. So I have to keep in between. Nandini, I am seeing your doubt now only. Can you please elaborate on the doubt? I am not able to understand. Be quick. Check. Done. So Mr. Anand sold his residential house property in March 2024. So house property was sold in March 2024. That is in previous year 23-24 itself he sold the property. So in 24-25 he is not the owner. In June 2024 he recovered rent of 10,000 from Mr. Gaurav, to whom he had let out his house for 2 years from April 2018 to March 2020. He could not realize 2 months rent of 20,000 from him, and to that extent his actual rent was reduced while computing the income from house property. Further, he had let out his house property from April 2020 to February 2024 to Mr. Satish. In April 22, he had increased the rent from 12,000 to 15,000 per annum, and the same was a subject matter of dispute. In September 2024, the matter was finally settled and Mr. Anand received 69,000 as arrears of rent for the period April 2022 to February 2024. Would the recovery of unrealized rent and arrears of rent be taxable in the hands of Mr. Anand, and if so, in which year? Okay, listen here. Would the recovery of unrealized rent and arrears rent be taxable? So here the question is expecting you to write some theory. புரியுதா? வெறும் practical இல்ல, it is expecting you to write some theory. So what theory you should write? Number 1, arrears of unrealized rent and recovery of unrealized rent and arrears of rent is taxable in the year of recovery. Point number 2, if it is taxable even though the assessee is not the owner of the house property, because in the question it is mentioned that he is not the owner during previous year 24-25. Then the income which is liable to tax under house property is calculated as follows. You have to write this theory, then only you have to compute the answer. So here particulars rupees. First one the unrealized rent. Unrealized rent how much? See Kana, how much will be taxable? 20,000 or 10,000? 10,000, because that much is only recovered. What amount is recovered will be taxable. Arrear also how much? 69,000. Sir, then what about this 20,000? What about this 12,000 minus 15,000? What to do? This and all is some additional information just to give context to the case, but not at all useful in workings. In workings, what you have to see? What is the amount recovered? That is it. So arrears 69,000. So total 79,000 minus standard deduction 30%. How much? 23,700. So income from house property 55,300. Okay, 55,300. Now next let us go to practice question 3. Please solve this question quickly. Read this question first, then solve this question quickly. Then we will discuss. Today class 9 o'clock the ஆரம்பிச்சிருக்கு, அதனால 11 to 11:15 break, then directly lunch break. We'll have the session till 5 p.m. today. Hello Nandini, yes, entire interest can be claimed as deduction if it is partly SOP and partly LOP time wise. That is, for part of the year it was let out and part of the year it was self occupied. Check. Shall we discuss? Mr. Vikas, listen here. Mr. Vikas owns a house property. Municipal value, fair rent, standard rent are 96, 126, 108 per annum respectively. In financial year 24-25, one third of the portion of the house was let out for residential purpose at a monthly rent of 5,000. So one third was let out. Okay. Remaining two third was self occupied by him. Two third is self occupied. Municipal tax at 11% of the municipal value was paid during the year. So 11% was actually paid. The construction of the house began in June 2017 and was completed on 31/5/2020. That is, before itself the construction was complete. The construction was complete. Vikas took a loan of 1 lakh on 1/7/2017 for the construction of the building. He paid interest on 12% per annum and every month such interest was paid. Compute the income from house property of Mr. Vikas for assessment year 25-26 if he has exercised the option of shifting out of the default tax regime. So shifting out means what? Old tax regime. We have to calculate as per old tax regime. So first and foremost, let us put the heading. Income from house property. So you please don't write short forms in the examination. Okay. So first I am going to calculate for let out portion and then self occupied portion separately. Can you do together by putting two columns? Answer is yes, definitely possible. But for let out portion only interest aspect is there, which we have to keep in mind. That is why I personally feel that it is like not using a lot of space by putting that extra column. So you can put it in the end. But if you putting side by side also, not a problem. Let out portion. Number 1, particulars, rupees. Municipal value, fair rent, whichever is higher. Standard rent, whichever is lower, will give you expected rent. Actual rent, whichever is higher, will give you GAV minus municipal tax. So first, municipal value. What is the municipal value? 96,000. So you can do 96,000 multiplied by 1/3. See, there are two ways here also. Either you can do 96,000, everything you can put it here, and expected rent alone you do 1/3. That is also possible because everything is divided by 3 other than actual rent. So before actual rent, everything you can do 1/3, or you can do together also. Your wish. So 96 into 1/3, 1,26,000 into 1/3. 96 into 1/3 is how much? 32,000. 126 42,000. 42,000 is higher. And here 1,08,000 into 1 by 3, 36,000. So lower is 36,000. Actual rent is how much? 5,000 per month. Correct? And is there any vacancy or unrealized? Nothing like that. 5,000 multiplied by 12, 60,000. 60,000 is GAV. Minus municipal tax. Municipal tax is how much? 11%. 11% on municipal value. See, here also there are two ways that you can do the calculation. Do 11% of entire municipal value multiplied by 1 by 3, or you can do 32,000 into 32,000 into 11%. 11% also.
3,520.
So why municipal taxes fully we cannot take as deduction? Because balance amount is for let out property portion. Let out property portion you can't take municipal taxes as deduction. It is not allowed. That is why only 1/3 you are allowed to take as deduction. Fine. 50, 480.
30%.
How much? 944. Now interest is there, no? Here I think pre-construction period is also involved. So better to take it to working note. We'll leave some space and we'll put working note. So how much is the interest? 12%. Just a second. 12% per annum on 1 lakh. Into 1 by 3. How much? 12,000 into 1 by 3. 4,000. And then reconstruction. First you have to see whether pre-construction is valid or not. Okay. So when was the construction complete? The construction was complete on 31st May 2020. So financial year 2021. Correct. So from when you will start claiming the pre-construction interest? 2021. So pre-construction period interest can be claimed for previous year 2021, 21-22, 22-23, 23-24 and 24-25. Okay. So for 24-25 pre-construction period interest is allowed. Here anyone is having doubt? No. Pre-construction period interest is allowed for previous year 24-25. Now what is this pre-construction period interest? So what was the total pre-construction period? Let us see. Starting from, listen here. When was the loan taken? Loan was taken on 1/7/2017. Pre-construction period will end on which date? 31/3/2020. Pre-construction period is 1/7/17 to 31/3/2020. 31/3/2020, because pre-construction period is the period before the year in which the construction got completed. So 31/3/2020. Okay, not 31 May. That is where silly mistake you make. So till 31/3/2020. So now in 2017-18, how many months? 7, 8, 9, 10, 11, 12, 1, 2, 3, 9 months. 9 months. So 9 months plus then 18, 19, 12 months, and 19, 20, 12 months. Correct? So now total 33 months. 33 months. So pre-construction interest is equal to what is that loan? 1 lakh, correct? 1 lakh multiplied by 12 by 100 multiplied by 33 divided by 12. Okay, any confusion in this? 33 divided by 12 months. 33 months divided by 12 months. So which comes to 33,000. 33,000. Oh, amale 12 get cancelled, 100 get cancelled. 33,000 pre-construction interest. Now pre-construction interest for let out property. Sorry, first we will see what is the pre-construction interest per year that is allowed. So interest deduction per year is equal to 33,000 divided by 5. For 5 years it will be allowed, correct? Annual installments, how much? 6,600. Interest for let out portion is equal to 6,600 into 1 by 3, which is 2,200. 2,200. So this is the working that you have to do. First, communicating to the examiner that pre-construction period interest is still valid. Then what is the pre-construction period? What is the total interest? Then what is the interest in respect of the let out portion? That is 2,200. So here you can write 2,200. What is the answer? digit சொல்லுங்க 4. Oh, current year interest is also there. No, my bad. 4,000 plus 2,200. Total deduction is equal to 4,000 plus 2,200, which is 6,200. So here we will put 6,200, correct? How much? 336. Okay. Next, let out portion. Self-occupied portion. Particulars rupees. NAV is 0 minus interest on housing loan. Okay, interest on housing loan, number 1, current period is equal to 12,000 into 2 by 3 is equal to 8,000. This we will use inner column. 8,000. Then pre-construction period. If you have done the calculation, you need not do the calculation once again. One time if you do, it is enough. So pre-construction period interest is 6,600 multiplied by 2 by 3. How much? 4,400. So loss 12,400. This you can do side by side also, one below the other also. Both are valid. 12,400. Then finally, income from house property is equal to 33,336 minus 12,400 is equal to 20,936. This is also a silly mistake that students make. This final step they won't do. The 20,936 they won't కంటిపుడిచిఫై. Anyone wants me to wait to make notes? Or some portion that I should show of the answer? Shall we proceed? Okay. But you are able to understand the answer? Correct? Now, next. Practice question number 5. Please solve this question now. Two brothers Arun and Bimal are co-owners. Arun and Bimal are co-owners of a house property with equal share. Read the question, solve it first, then we will discuss the answer. Try to be as quick as possible. However, he will only stand at tree. He will never sit down. In between the class, for the entire 3 hour period or 4 hour period, he will not drink water also. In one class, he had cups. So the entire class, we were all pleading that at least for avoiding that hiccup, you please drink water. You will not drink water. For the entire class, we have that level of dedication. Now sitting here, I feel that how difficult it was to be in that place. I think in one class there will be 1,000 students, 1,500 students. Online class was not a thing. How fast things have changed. You take class like this, taking year. Swaha, Solomon. Say what it's. Hello, students. Today we are going to learn section number 1. This section is talks about the three types. Swaha. I don't know, speaking on. Be quick. All of a sudden nostalgia la போயிட்டேன் நான். 2016-17 first time I am actually a person living in Coimbatore. ஃபர்ஸ்ட் டைம் கோயம்புத்தூர் விட்டு வெளியே வந்தேன். அதுக்கு முன்னாடி வெளியே வந்ததே கிடையாது. சென்னைக்கு வந்து ஜஸ்ட் ஃபார் சிஏ கோச்சிங், அது கூட வீட்டில் ரெகுலர் பண்ணிட்டு அட் கோயம்புத்தூரில் கோச்சிங்கே கிடையாது. ஸோ ஐ ஹாவ் டு கோ டு சென்னை. அண்ட் வென் ஐ கேம் டு சென்னை ஆல்சோ like it was only a 4.5 months period, but it was so happening that during my classes I remember that our class was on Greaves Road தெரியும்ல? So Apollo Hospital, yeah, Apollo Hospital ki பக்கத்துல தான் classroom. So Jayalalitha was serious at that time. She was admitted into Apollo Hospital. Night 12 மணி உட்காந்து I was seeing the news, what is going to happen, what is not going to happen, nobody knows. And all of a sudden then in the morning still she was serious. We were all expecting definitely it is going to be the it is going to be a holiday in class, right? Because the classroom is the building besides Apollo Hospital, like at the building, but there was class. So we were on the class to போறதுக்கு கூட there was a human chain which was formed by all policemen and military people, and in between the human chain all VIP cars and all were passing through. I have never seen media in my life. கோயம்புத்தூர்ல உட்காந்து இந்த நியூஸ் ரிப்போர்ட்டர் மீடியா அதெல்லாம் பார்த்தது கிடையாது. ஃபர்ஸ்ட் டைம் ஐ வாஸ் சீயிங் எவ்ரிவன், ரஜினி வண்டி போகுது, ஓபிஎஸ் வண்டி போகுது, இபிஎஸ் we do not know because in the it was a black this no we cannot see who is sitting inside. Only the reporters will tell that this vehicle belongs to so and so person. Interesting times. Then when she passed away, I was staying in PG. I didn't even have food supplies. All the shops are closed. Everything is closed because don't know what is going to happen. Maybe some violence can break out. I was so scared. I just walked to the railway station. There was no cab, no conveyance, no auto. Then immediately took a train, went to Coimbatore. During that period, Varda cyclone also came. I was staying in Triplicane in a PG. So during the cyclone also power outage, my phone did not have charge, could not speak to my parents for 2 days. Everyone was worried. And Jallikattu procession, the Jallikattu problem also happened at that point of time only. Like 3 months, 4 months, Chennai vanda ellame paathu. Let's see, around 40-50,000 people together in Marina Beach, all wearing black, protesting against PETA. Done? Let us discuss. Two brothers, Arun and Bimal, are co-owners of a house property with equal share. So here the share is definite and ascertainable because we know that 50% share belongs to Arun, 50% belongs to Bimal. The property was constructed during the financial year 2016-17. The property consists of 8 identical units situated in Cochin. During the financial year 24-25, each co-owner occupied 1 unit for residence and the balance 6 units were let out at a rent of 12,000 rupees per month per unit. The municipal value of the house property is 9 lakhs. Municipal taxes are 20% of municipal value which were paid during the year. The other expenses are repair, insurance, interest payable on loan taken for construction, that is 3 lakhs. One of the let out units remained vacant for 4 months during the year. Arun could not occupy his unit for 6 months as he was transferred to Chennai. He does not own any other house. Is this point relevant for us? Answer is no, not that relevant because self-occupied, unoccupied both are same. The other income of Mr. Arun and Bimal are 2,90,000 and 1,80,000 respectively for financial year 2024-25. Under this head, if they both exercise the option of shifting out of the default tax regime. So old scheme also you have to calculate, new scheme also you have to calculate. Here co-owner concept is also there, partly let out, partly self-occupied concept is also there, vacancy concept is also there. Okay. So income from house property. How should we approach this question? How should we approach this question? என்ன பண்ணலாம்? Let out portion இருக்குல்ல, let out portion, self occupied portion, both separately we will find out. Let out portion இருக்குல்ல, that we will find out only for the house property as a whole and divide it into ownership ratio as we had already discussed. Self occupied portion இருக்குல்ல, அது we will calculate separately for Arun and Bimal because both are having a separate interest deduction limit. So income from house property, first வந்து let out portion. So how much is let out? Total there are 8 units. So 6 units are let out of 8 units. Correct? So மேல நாங்க படிச்சோம்ல same concept, 6 divided by 8 proportion. Correct? Let out portion ku number 1 is, we'll write the format first. Municipal value, fair rent, higher, standard rent, lower, expected rent, GAV, sorry, actual rent, GAV, இங்க வரைக்கும் எழுதிக்கலாம், அப்புறம் பார்க்கலாம். So what is municipal value? Municipal value is 9 lakhs. Okay. So shall we put 9 lakhs into 6 by 8? Correct? How much? 675,000. Parent கொடுத்திருக்கா? No, கொடுக்கல. So inga just put a dash and go to higher value. Higher is 675,000. Standard rent illa. Okay. So dash. So lower value 6,75,000 is expected rent. Actual rent vandu. Now what is it given about actual rent? Rent is 12,000 per month per unit. 12,000 per month per unit. Municipal value is okay. Idla vacancy irukka? Yes. Arun put okay. One of the let out units remained vacant for 4 months during the year. For 4 months during the year. But unrealized rent illa, vacancy mattu da irukku. So listen. Actual rent is how much? So here we will, let's just put a working note. Konjam calculation adhigama irukku, inga space pathla, working note போடலாம். கொஞ்சம் space விட்டுட்டு we will put working note. Actual rent is equal to 12,000 multiplied by 12 months multiplied by 5 units. Correct? Plus 12,000 multiplied by 8 months multiplied by 1 unit. Correct? How much? 12,000 into 5 into 12. 20,000 plus 12,000 into 96,000. Total level achu? 816,000. So this is actual rent, 816,000. Now vacancy. Correct me if I am wrong. Vacancy is equal to 12,000 multiplied by 4 is equal to 48,000. Now actual rent plus vacancy. Actual rent plus vacancy. 8,64,000. 8,64,000. Now listen here. So here what you have to do, you have to compare with actual rent plus vacancy rent. Which is 8,64,000. Which is higher? 8,64,000 is higher. So GAV will be what? Actual rent. Which is how much? 8,16,000. இது புரியுதுல? வேகன்சி எப்படி பண்ணுவோம்? கம்பேர் பண்ணும்போது வேகன்சி ஆட் பண்ணுங்க, பட் ஆன்சர் எழுதும்போது வேகன்சி எழுதக்கூடாது. ஃபைன். So GAV is actual rent, which is 8,16,000. By comparing, we will compare expected rent with actual rent plus vacancy rent. But whichever is higher after calculating, if actual rent plus vacancy rent is higher, we will take actual rent as GAV. Fine. Less municipal tax. Municipal tax is how much? 20% of municipal value. So 6,75,000 into 20%, which is 130,000. 35,000. 135,000. NAV how much? 681,000. Then minus 30% standard deduction. Correct? Minus interest. Interest irukka? Okay, total interest is how much? 3 lakhs. So what is the interest? 3 lakhs multiplied by 6 by 8. Correct? How much? 225,000. Now give the final answer. 251,700. So this 251,700 is there, no? This belongs to both co-owners, Arun as well as Bimal. This we have to divide into ownership ratio. Right? Sir, can we put working note in between and then continue the answer? No problem. See here, working note is there in between. Then we have continued the answer. That is not at all a problem. You don't, these small aspects, no, please stop worrying about all this. As long as your answer is clear, the examiner should be able to understand what you have written. That's it. Income from house property of let out portion is 2,51,700. Share of Arun is 50%. That is how much? 1,20,000. 125,850. And then share of Bimal is 50%. 125,850. Now let's come to self-occupied portion. Here we'll do Arun separate, Bimal separate. Correct? Na? Interest on housing loan is how much? 3 lakhs. This 3 lakhs is for what? Construction of the house. Construction of the house. So you should put assumption. All the condition. First, எவ்வளோ இருக்குன்னு பார்த்துக்கலாம். எவ்வளோ வருதுன்னு பார்த்துக்கலாம். Interest on housing loan 3 lakhs each or 3 lakhs total? 3 lakhs is total. So 150 each. Correct? 1998 and கொடுத்திருக்கா? Then the conditions are not satisfied, no? எங்க இருக்கு? மேல. Okay. No issue. Interest on housing loan. So how much? 3 lakhs multiplied by 1 by 2 multiplied by 2 by 8. Correct? எவ்வளோ? 37,500. Assumption all conditions to claim higher interest limit are satisfied. So 37,500 can be claimed with the loss from house property. $37,500. இப்போ என்ன பண்ணணும், old scheme தனியா new scheme தனியா எழுதணும். கரெக்ட்டா? Now income from house property under optional tax regime. Arun Bimal. Let out portion self occupied property. எவ்வளவு வருது? 12 எங்க இருக்கு? 125850. Self occupied portion is minus 37,500. So what is the income from house property? 88,350. Then if it is 115 BAC, here you will put 125850 each. Okay va? Shall we compare? In the question then இந்த क्वेश्चन பார்க்கறேன் நான். அருண் பிமல். கரெக்ட். அருண் பிமலோட ஆன்சர் பார்க்கணும். ஓ அதர் இன்கம் இருக்கு, அது கூட you have to also add it to find out the total income. That we have not done. So அது கூட you have to do. So under optional tax regime, 37,500 and 125850, 125850 is let out portion, which is allowed only in the 115 BAC. In 115 BAC, SOP interest not allowed. So SOP house property income will be 0. Only 125850 will be income from house property. Whereas in the old tax regime, 37,500 also will be allowed as loss from house property. Hence the total income from house property will change. Correct ah da irukku. Lastly you add the other income and finally you will have the total income. Fine. Any doubts in solving this answer? Presentation, if you see my presentation versus institute presentation, it will be different, but both can be followed, not a problem. Now we will break and we will start by 11:15. If you have any doubt in solving this question, please ask me. I will say. It is not enough for Mr. A to prove that he has fulfilled the objective. Mr. B should also prove that he has the source of income to do this. That also should be done. Same with interest. Same with the share capital. As soon as given share capital, they should have the source to create that share. Right. Now let's have a discussion on illustration number 8. Illustration number 8. Listen, this Ganesh question is there, no? There are three self-occupied property. So hence any two have to be chosen as exempt and the third one will become deemed to be let out property. We are not having ample time to solve this question in class. So let us have a discussion of this question quickly and move on to the next one. Ganesh has three houses, all of which are self-occupied. The properties of the particulars of the houses for previous year 24-25 are as under. Municipal value, fair rent, standard rent, date of completion or purchase is given. Municipal taxes paid during the year is given. Interest on money borrowed is given. Interest for current year on money borrowed in April 2017 for purchase of property. So for house 3 also interest details is given. So basic details are given for three houses. Okay, house 1, house 2 and house 3. Here you will find one particular as missing, which is what? Actual rent. Why actual rent is missing? Because all these three houses are self-occupied property. Now what you should do, if such type of question comes in the examination, number 1, solve the question first as if all the three houses are DLOP. As if all the three houses are DLOP, deemed to be let out property, and find out the answer. Here you can solve simultaneously. So house 1, one column, house 2, second column, house 3, third column. So first you will find expected rent, which is fair rent, municipal value, standard rent. You find the expected rent after calculation. Then find NAV as usual. Then deduction. Interest on borrowed capital, entire interest will be allowed as deduction in case of deemed to be let out property. Fine. So entire interest can be claimed as deduction. You will find out the total value. Now you have to start the permutation and combination. Okay. So first option is house 1 and house 2. House 1 and house 2 are self-occupied and house 3 is deemed to be let out. In such case, for deemed to be let out portion, already you have found out the answer. Fine. For self-occupied alone, you have to do the calculation for each and every step. That too, for first step you will do the calculation, second step you will do the calculation, for third step you need not even do the calculation because all the houses you would have already done. So you just have to pick the figures and put it in the right place. So house 1 self-occupied, amount will be 0. House 2 self-occupied, no interest deduction, amount will be 0. No interest deduction. In 115 BAC either. Okay, that is not given. So under default tax regime, they are finding out under default tax regime also, and old tax regime also find out pannirukangala. Yeah, shifting out also they are finding out. So default tax regime, very simple to solve this question, because for SOP no interest deduction is allowed. So you only have to take the DLOP version and then you have to compare the same. It is very simple. If it is the opt out regime, there only some calculation is required. So opt out regime la vandu paakala, shifting out of the default tax regime. In such case, house 1 and house 2 are self occupied, house 3 is deemed to be let out. Then what you will do? For house 1 there is no interest, hence no interest deduction. For house 2, maximum interest deduction is 30,000 because the loan does not satisfy the conditions. So 30,000 is the maximum deduction, and this deemed to be let out version you have already found out the answer. Fine. So then find out the final answer. So final answer is 43,640. Second version, house 1 and 3 are self occupied, house 2 is deemed to be let out. In such case, house 1 ka amount is 0, that you already know. House 2 ka vande deemed to be let out, you have already calculated. And house 3 self occupied, the conditions are satisfied, that is why higher interest limit is allowed. 1,75,000 interest deduction is allowed. So final answer will become 1840. Then option 3, 2 and 3 are self occupied and option house 1 is deemed to be let out. Okay. In this house 1 deemed to be let out, you have already found out the answer, so you will put the answer here. And then house 2 and house 3 also you would have worked out in the first two options. Angarande, you just have to take the figure and put it here. 30,000, 1,75,000. Here answer is coming as 19,800. Now you have to compare all the three answers. If you compare, you will find out that 1840 has the least amount of income from house property. Hence, this option, option number 2 is the best option. House 1 and house 3 should be self-occupied and house 2 should be deemed to be let out property. Most beneficial for the SSC. Okay. Since this, it will take a lot of time to work out, that is why I am just explaining it here. I hope you have understood. Okay. Next, illustration 7 பார்க்கலாம். Illustration 7. Now this question I quickly want you to work out. Be very quick. Last question we are working out in house property. After this we will move to salary discussion. Solve quickly. house property question pathone format potrunu. Put the format as soon as you see a house property question, start solving. Done. Okay, listen. Srimati Rajlakshmi owns a house property at Adayar in Chennai. The municipal value of the property is 5 lakhs, fair rent is 4 lakh 20, standard rent is 4 lakh 80. Property was let out at 50,000 per month up to December 2024. Thereafter, the tenant vacated the property and Srimati Rajlakshmi used the house property for self-occupation. Now listen here. Is there a case of vacancy in this question? Vacancy irka illaya? Answer is no. There is no vacancy in this question. Here, what the trick aspect is that the students see the word vacated, assume that there is vacancy, do the vacancy calculation, then the entire question becomes wrong. The tenant has vacated the property. After vacating, she has used it for own residence. So this is a case of it is partly let out property, partly self-occupied property for a time duration, time wise partly let out, partly self-occupied. In such case, very simple. Treat the entire property as let out property and solve the question. Very simple. Rent for the month of November and December could not be realized in spite of owner's efforts. So this is unrealized rent. All the conditions prescribed under Rule 4 are satisfied. She paid the municipal taxes at 12%. She had paid the interest of 25,000 during the year for the amount borrowed for repairs of the house property. Compute her income. Listen. Now computation of GAV. This and all is easy. You will do yourself. Not a problem. Then standard deduction 30% interest. Here only. The actual rent calculation is there, no? Rent received plus rent receivable minus unrealized rent. So rent received is 9 months rent. Rent received is 7 months rent. Rent receivable is 2 months rent. So 7 plus 2 total 9 months rent minus unrealized rent is 2 months rent. So total 3,50,000. Any doubt? Listen. No. So 50,000 rent received is what? From April to October. April, May, June, July, August, September, October. So it is 7 months into 7 plus rent receivable November and December into 2 minus unrealized rent 50,000 into 2. Okay. So the answer is 3,50,000. So actual rent is how much? 3,50,000. Any doubt in this calculation, in this question? No? Fine. So 3,50,000 you are going to compare with 4,80,000. So that's what I told. That this 3,50,000 is only a rent which belongs to 7 months, but expected rent is for how many months? 12 months. You are comparing it with 12-month expected rent. Obviously, expected rent is going to be higher value. That is why expected rent is taken as GAV. And then question is solved normally. So treat this question like a let out property question and solve the question in such case. Now let's come to salary. Listen, now we are starting with salary head of income, a huge chapter, but it is an important chapter when it comes to CA intermediate, because salary chapter and house property chapter is there, no? This is tested in CA intermediate level, not tested in CA final level. In CA final level, salary and house property chapter can only be tested in two ways. One is computation of total income, one or two adjustment will be there, or you will get a case law based question, a case which has happened in court. That type of question will come. But generally full fledged question is not coming. That is why house property and salary are tested only at intermediate level. So whatever question you will get, big question, numerical question, it will be in intermediate. House property also comes in certain examination, does not come in certain examination, but salary definitely will come and carry some marks. So important from examination point of view. The salary chapter is there. No, this is one chapter which many students skip and go in the examination. Why do students skip? Number one, it is because it is a vast chapter. Number two, it is a memory based chapter. So you have to memorize a lot of things in salary chapter. That is why my humble recommendation, I have tried my level best to shorten the salary portion as much as possible so that it will be easier for you to retain and memorize. So after I complete the salary chapter, I want you to go home and by heart the entire salary chapter. 3 chapters karna, tax rates, salary and TDS. This you have to by heart, no other go. The other chapters, the amount of portion that you actually have to by heart is very little. But in salary and tax rates and TDS, it is huge. That is why here I will help you a little, but you only have to help yourself for the vast majority of portion. And since there is limited amount of time to complete this chapter, that is why I will first rush up with the theory, and theory is mostly understandable, simple language, because everything is just practical formulae, etc. After that, whatever time persists, we will try to solve as many questions as possible. So first and foremost, let us see the concept of salary. Concept of salary. What is salary? You would have known in common parlance that if any amount is regularly received from the employer every month, that regular receipt is called salary. For example, I am getting a monthly salary of rupees 30,000 from my employer. That is salary income. But in income tax, the salary income is a wider term. It not only refers to the monthly amount which is received by the employee, but it also refers to some other amount. So how to know what income is taxable under salary head and what is not taxable under salary head? To know that, you want to establish employer-employee relationship. Employer-employee relationship. If any income arises because of the employer-employee relationship, it will be taxed under salary head of income. If does not arise because of employer-employee relationship, not taxable under salary. Okay. Now how to know what is employer-employee relationship? For this, you have to know the difference between contract of service and contract for service. Contract of service and contract for service. Name any film producer. Any film producer? R.P. Sauta. Spell pen. Oh, Chaudhary. R.P. Chaudhary is a film producer. Okay. Now he approaches Rajnikant. Now there are two types of contracts that R.P. Chaudhary can offer Rajnikant. In the first type of contract, he tells that I want to use your services for 2 years. So in 2 years, you are bound by my contract. I will give you a fixed sum every single month or in regular intervals. But during these 2 years, whatever I am telling you to do, that you should follow. If I am telling you to do an ad film, you have to do an ad film. If I am telling you to do a serial, you have to do a serial. Daily soap na daily soap, movie na movie, series na series. Everything Rajni has to follow and do for those 2 years. This type of a contract is a contract of service. Contract of service, where R.P. Chaudhary is actually paying Rajni for the time that Rajni is giving him. Okay, and whatever service he wants Rajni to do during that particular time, he can ask Rajni to do. This is contract of service. In this case, there is an employer-employee relationship between him and Rajnikant. Now, what if RP Chaudhary just goes to Rajnikant for a single movie project? He is telling, I want to produce so and so type of a movie. I want you to act in it. So for this movie, how much are you going to charge? I will pay you and let us do it together. This is a contract for service. Contract for service. Here Rajnikant is independently acting in his own professional capacity and acting in the movie. This contract for service is always taxable under PGBP head of income. So for service na employer-employee relationship, salary head of income. For service na PGBP head of income. So employer-employee relationship is compulsory. Of service salary, for service PGBP. Now what about partnership firm? From a partnership firm, a partner can receive partner's salary, correct? Is the partner salary taxable under salary head of income? Answer is no, because partner is part owner of the partnership firm. He is not employee. There is no employer-employee relationship. That is why the salary received by a partner will be taxable under PGBP head of income. It is taxable under PGBP. Next, salary to MP or MLA, member of parliament or member of legislative assembly. This is also not taxable under salary head of income, but it is taxable under income from other sources, because member of parliament and member of legislative assembly are not the employee of the government. They are only the persons who are forming the government. They don't have employer-employee relationship with the government. That is why their salary is also taxable under IFOS, not taxed under salary head of income. Sir, whether full-time salary is taxed under salary head and part-time salary is taxed under IFOS head? Answer is no. Whether full-time or part-time, both salaries are taxable under income from salary only. There should be employer-employee relationship. Next, salary foregone. It means what? For example, I don't want my salary. I tell my employer that you don't give me salary. Instead, you donate it to your favorite charitable fund, or you donate it to my favorite charitable fund. In such case, is this amount which is donated, is it taxable or not taxable? Answer is it is taxable, because salary foregone also will be salary. Let's say I asked my employee. Then charity. I ask my employer directly to give, let's say 1 lakh rupees to charity. Don't give me the salary of 1 lakh, instead give it to the charity. In such case, how does the Income Tax Department or Income Tax Act see this transaction? Income Tax Act sees this transaction as employer only given 1 lakh to him, he has given to charity. That is why this 1 lakh is taxable as salary head of income, and this 1 lakh charity is only spending the taxed income. Only spending the tax income, usage of income. That is why salary foregone is also taxable. However, there is one certain act in which a central government employee can give up their salary. If that act is triggered, in such case, the central government employee need not pay tax on such salary. Specific question, suppose MCQ 11, you should be able to answer. Tax-free salary. See, there is no concept of tax-free salary, because listen, even if the employer is paying the tax on my salary, I am the employee. If the employer is paying the tax on my salary, the tax paid by the employer is also my salary. If employer is paying the tax on my salary, then tax paid by the employer is also my salary, because that is one benefit that I am getting from employer. Correct? So tax will come on that tax also. Tax should come on that tax also. Okay, next. Now let's come to charging section. In salary head of income also there is a charging section, there is a computation section. Charging section is section 15, computation section is section 17. Sir, what about section 16? Section 16 has deductions, talks about deduction. So charging section says that salary head of income, salary is taxable at due or receipt, whichever is earlier. So if salary is received before, it will be taxed on receipt basis. If it is due before, it will be taxed on due basis. Sir, it was already taxed on receipt. Now when it is due, will it be taxed again? Yes or no? Answer is no. Already tax ஆயிடுச்சுனா திருப்பி எதுக்கு tax பண்றது? If it is taxed already on receipt basis, it will be not taxable on due basis. So salary means advance. Salary means advance salary plus current salary plus arrears of salary. What is arrears of salary? Disputed salary of the past period which is received in the current period. So earlier that disputed salary was not taxed. So now it will be taxed. Now let's come to computation of salary. First, there are three subsections 17.1, 17.2, 17.3 in computation section. Section 17.1 talks about salary, 17.2 talks about perquisites, 17.3 talks about profit in lieu of salary. First, let us see 17.1. 17.1 defines salary. It is an inclusive definition, and whatever word you can think of in salary, you can include it in the definition. Okay, wages, pension, advance, allowances, provident fund, etc., etc. Detailed definition in there in study material, not that relevant from exam point of view. That is why I have not included it. So allowances are there, no? That is a part of salary definition, because that is also a fixed amount that is received on a regular period. So it is a part of salary definition. Now let's talk about perquisites. Perquisites. Sir, what is perquisites? To know this better, let us understand the difference between allowance and perquisite. So you will easily be able to understand what is allowance and what is perquisites. Allowance is a fixed amount received, whereas perquisite is a benefit or facility which is given to employees. Allowance is given whether the amount is incurred or not incurred. Perquisite is given only when it is incurred. Let me give you an example. Employer, employee. Now employer is giving employee three types of benefit. Employer want to give cab facility. Cab facility to the employee. This cab facility can be given in three major ways. First way is employer is giving 5,000 per month for cab. 5,000 per month extra for cab. Now employee can take the cab. Employee need not take the cab. Employee can come by his own two-wheeler, not a problem. Still he will be receiving the 5,000 rupees. Next, employee is arranging cab facility. Cab facility, where what happens is employer himself has arranged a cab. That cab will come to the employee's place, pick up the employee and come to office. That is second. And the third one is reimbursement of cab bills. So third one is what? Employee is taking a cab, let's say Red Taxi or Uber or Rapido or Ola. He is taking a cab and coming to the office. He is showing the invoice of that cab, and based on that invoice he is getting reimbursement from the employer. So 5,000 per month fixed can be given, cab facility can directly be given, reimbursement of cab expense can be given. Now this 5,000 per month fixed is called allowance. Allowance. Why is it allowance? Number one, because it is fixed in nature. Number two, because it does not matter whether the employee has spent the amount or not. Okay, still it will be given. But second one and third one are called perquisites. Both of them are perquisites. First one is non-monetary perquisite and second one is monetary perquisite. Non-monetary and monetary. Non-monetary means what? Directly the facility is given to the employee. Money is not given. Okay, and in monetary perquisite, money is given to the employee, but only respect to the actual expenditure that is incurred. Fine. So only if the amount is incurred, perquisite will come. If amount is not incurred, perquisite will not come. So non-monetary perks, monetary perks. So perquisites is given in section 17 subsection 2. Now let's come to section 17 subsection 3. Profit in lieu of salary. Sir, what is this profit in lieu of salary? You remember yesterday I had told you about the difference between capital receipt and revenue receipt. I told you capital receipt is taxable under the Income Tax Act only if it is provided in the Act. Revenue receipt is not taxable only if it is exempted from the Act. So this profit in lieu of salary is nothing but different capital receipts under salary head of income. Since it is mentioned here, these capital receipts will be taxable. Okay. First one, compensation on termination of employment. Compensation on termination of employment. So I am telling my employee, we already saw this example yesterday. I am telling my employee, you take 10 lakh rupees, leave my organization. So this 10 lakh rupees is given as a one-time payment. It is a capital receipt, but since it is given here, it will be taxable under salary head of income. Next, compensation on modification in terms of employment. So terms of employment are modified. For example, Mr. X is the CEO of my company. Now I am telling Mr. X that now I don't want you as the CEO. You step down and you become my manager. I will bring some other CEO. Mr. X got very angry that instead of promotion, you are giving me a demotion. That is why I told Mr. X, okay, to compensate for this, I will give you 1 crore rupees extra. You'll be happy. So this 1 crore rupee that I given to Mr. X is for modification in his term of employment. This is a capital receipt, but still it will be taxable under salary head of income. Next, payment received from Provident Fund or any other fund. Provident Fund, Gratuity Fund, Superannuation Fund, whatever amount is received, the lump sum amount, it is capital receipt, but it is profit in lieu of salary. Hence, it is taxable under salary head of income. Then, Keyman Insurance Policy. Now, this Keyman Insurance Policy, generally students get very confused because salary head of income also it is mentioned, PGBP also it is mentioned, income from other sources also, the same Keyman Insurance Policy is mentioned. So, if Keyman Insurance Policy amount is received, where to tax it? Okay. Keyman Insurance Policy. Keyman Insurance Policy. Now, what is this Keyman Insurance Policy? Let's say I am the owner of my organization and because of me only the entire organization is running. Now, if something happens to me, then this entire organization is at a huge risk and it will go into a loss. That is why I am the key man of this organization. So, I will take an insurance policy called Keyman Insurance Policy, in which I will be paying a regular premium, and if something happens to me, then the insurance company will compensate the party. They will either compensate me or they will either compensate the company. You get my point? So, Keyman. Let us take another example. Mukesh Ambani. Mukesh Ambani is a keyman for Reliance. So, let's say Reliance takes a keyman insurance policy on Mukesh Ambani. Now, let us assume that Mukesh Ambani is an employee of Reliance. In such case, what can happen is, let's say something happens to Mukesh Ambani. He is either severely ill or he is no more. Let's assume that he is no more. In such case, what will happen? The Keyman Insurance Policy will compensate the person also because he is no more. So some amount should be going to Mukesh Ambani's family also. Same Keyman Insurance Policy will compensate the employer also because since Mukesh Ambani is no more, Reliance will go into a loss. So this loss has to be compensated. When employee is receiving the amount from Keyman Insurance Policy, it will be taxed under salary head of income. If employer is getting amount from Keyman Insurance Policy, it will be taxed under PGBP head of income. Then, now is Mukesh Ambani actually the employee in Reliance? Answer is no. He has retired. He is not the employee. He is an advisor to Reliance Industries. But still, he is a key man because he still plays a role in major decisions that are made in Reliance Industry. So, is there an employer-employee relationship? Answer is no. There is no employer-employee relationship. In spite of that, key man insurance policy can be taken. The person is not the employee, still key man insurance can be taken in respect of that person. In such case, if something happens to him, it will be, he is neither the employer nor the employee. Mukesh Ambani, if in employee capacity, he or his family is not receiving the money, it will be taxed under income from other sources. Mukesh Ambani is the employee, he is receiving salary head of income. He is not the employee, he is receiving other sources. And if company is receiving, then PGBP. Next, lump sum amount or otherwise before joining employment or after cessation of employment. Listen, I went to a person and I told that you please leave your earlier organization and you come and join my organization. As a joining bonus, I will give you 2 lakh rupees. So this joining bonus of 2 lakh rupees is to establish the employer-employee relationship between me and the prospective employee. That is why that is also taxable under salary head of income. It is a capital receipt, but still it will be taxable. Next, now let us see the parts of salary one by one. We have seen the meaning of salary, we have seen the meaning of perks, we have seen the meaning of profit in lieu of salary. Now we are seeing all the terms in the salary one by one. Sir, is there any format for salary chapter? Answer is no. There is no format for salary chapter. Sir, is it okay if I write gratuity first, basic salary second, wages third, any order you write? It is not a problem. How should you solve a salary problem? Very, very simple. Whatever is taxable under salary head of income, you write the name and write the amount. Add it. Avlada. Whatever is not taxable under salary head of income, you please mention it that so and so income is exempt and you put the taxable amount as 0. Whatever deduction is there, you please reduce it. That's it. That is only the salary working. There is no specific order. Okay. First, basic salary. Basic salary means what? The monthly salary which is received is called basic pay or basic salary. Then dearness allowance. Dearness allowance is the allowance which is given to tackle inflation. Allowance given to tackle inflation. So as with time the prices of commodities are rising, hence the dearness allowance is given apart from basic salary so that the employee can afford all those items. Why are we studying dearness allowance separately? Is it not taxable? Answer is no. Dearness allowance is fully taxable. Dearness allowance is always fully taxable. But why we are studying separately? Because it is used in salary definition at many places. Dearness allowance can be in terms or not in terms. In terms or not in terms. In terms means what? It forms part of retirement benefits. Not in terms means does not form part of retirement benefits. So in terms means what? And the salary employee join பண்ணும்போதே terms of employment ல வந்து dearness allowance கொடுத்திருக்கு. Such dearness allowance forms part of retirement benefits. Sir, in terms of employment ல இல்ல, but later on I am giving the person retirement benefit. These are not in terms and generally they do not form part of retirement benefits. If in question nothing is given, then you can assume that it is in terms. But here listen, assuming in terms and assuming not in terms is equal assumption. Equal assumption. It means what? In terms also possible, not in terms also possible. Whenever there is equal assumption, first and foremost, you have to try to solve the question in both manners. But in exam time will not be sufficient. Hence, whatever you are assuming, first you assume that I assume assumption dearness allowance is in terms, and then at the end you should also put a note. If it was assumed that dearness allowance was not in terms, the answer might vary. And the word line போட்டுட்டு விட்டுருங்க. Okay. Then fees. If any fees is given by the employer to the employee by whatever name called, it should be added to salary head of income. Then commission. Commission also should be added to salary head of income. Why are we learning separately? Because commission can be of two types. Turnover commission other than turnover commission. Turnover commission means what? It is a percentage of turnover achieved by the employee. So I am having an employee. He is only responsible for sales in my organization. Because of him, I have achieved a turnover of 1 crore. So I am telling him that I will give 1% of this 1 crore, 1 lakh rupees as commission. So this is only called turnover commission. Then other types of commission are called other commission. Why are we learning this separately? Because turnover commission becomes part of salary definition in few cases. That is why separate padikram. Then bonus. Bonus is taxed only on receipt basis. So whenever this bonus is received, only then it is taxed. Advance salary. Listen here. Salary received in advance is called advance salary. Salary that is received before itself, it is called advance salary. But you have to be careful that you should distinguish between advance salary and advance against salary. Advance against salary is a loan which is given to employee. Advance salary na enna? Salary advance la kuduthanga. Advance against salary na enna? Loan கொடுத்திருக்காங்க. அந்த loan repay பண்ண முடியலனா salary ல இருந்து கட் பண்ணிடுவாங்க. புரியுதா? So advance against salary or advance salary. If it is advance against salary, it should not be taxed under salary head of income because it is a loan. Moreover, if advance against salary is given, you should also know that there might be possibility of concessional interest provided to employee. That concessional interest is also taxable as perquisites. We are going to study today. Next, arrears of salary. Disputed or retrospective salary received. Past period salary வந்து current period la கடிச்சிருக்கு. If it is already taxed, no need to tax on receipt. If it was not already taxed, now you have to tax it. Arrears. Now let's come to deduction. Section 16 speaks about deduction. Only standard deduction is allowed under section 115 BAC. So in the new tax regime, only standard deduction is allowed. No other deduction is allowed for salary chapter. So what is the standard deduction? It is 50,000 or salary, whichever is less. So fixed amount 50,000. And in case of new scheme, it is 75,000. I told you, no, for the first time from previous year 24-25 onwards, the government has started giving extra deduction to new scheme. Earlier, no deduction was given to new scheme, only certain deduction were given to old scheme. But nowadays what is happening? Extra deduction is given to new scheme also to make the new scheme more lucrative. So if you are taking the old scheme, standard deduction is 50,000. If you take the new scheme, standard deduction is 75,000. So 115 BAC la vandu 75,000. Sir, it is a fixed amount. It is a fixed amount. Sir, if my salary is 1 lakh rupees, what is the standard deduction? 50,000. Balance 50,000 only taxable. Sir, if my salary is 1 crore rupees, what is the standard deduction? 50,000. 50,000. Balance 99 lakh 50,000 is taxable. Next, entertainment allowance. Entertainment allowance means what? Amount paid to employees for hospitality of customers. For example, let's say I am teaching here, no, in Tarun's Brainery. Tarun sir is the owner of the academy. Let's say one Anna will come, no, Raghupati Anna will come. So Tarun sir has given him a fixed amount of 2,000 rupees every month. He will provide that you please take care of the faculty who are coming here. Okay, if they want any tea, coffee, bonda, bhaji, tair sadam, you please buy and give them. If they are not getting that anything, the amount you can keep it with yourself. This is called entertainment allowance. Entertainment allowance. Generally in private organizations, entertainment allowance is not given. It is given in government organizations. Okay, for example, some politician or some VIP comes to some government office, they have to take care of that VIP or politician. That is why an allowance will be given to certain government officers. That is why even in Income Tax Act, private employees cannot claim any deduction for entertainment allowance. Such entertainment allowance deduction is only allowed to government employees. Government employees. Then what are the condition? The condition is that entire entertainment allowance, first you have to add it to salary, because it is an allowance given by government, correct? So first you add it to salary, then in the deduction column you have to claim 1/5 of basic pay, actual entertainment allowance received, or 5,000, whichever is lower. How much is the deduction? 1/5 of basic pay, entertainment allowance received, or 5,000, whichever is lower. This 5,000 is not per month, it is per annum. Only 5,000.
Maximum how much deduction? 5,000. Maximum 5,000. Next, professional tax. Professional tax is the tax paid on employment which is levied by the state. Generally, it is paid to the corporation. Professional tax. Generally, maximum amount of professional tax is 2,500. But don't see this 2,500. Whatever given in the question, you take it. Fine. If professional tax is paid by the employee can claim deduction of professional tax. If it is paid by the employer, so you add it to the salary first, then you claim it as deduction. First add it to salary, then claim it as deduction. And listen, it is only allowed in old scheme, not allowed in new scheme. Now let's come to retirement benefits. So deductions over, basic parts over, retirement benefit one by one we are going to see. First and foremost, gratuity. Gratuity. What is gratuity? Voluntary payment by the employer in appreciation of employees' services. So an employee works in the organization for many years. So as an appreciation of his prolonged service, the employer will give a lump sum amount to the employee. This is called gratuity. But nowadays it is not voluntary. Nowadays it is compulsory. Compulsory. If gratuity is received during service or during death or retirement, the treatment is different. If gratuity amount is received during service, the amount is fully taxable. During the service, fully taxable. But during death or retirement, exemption is available under section 10 clause 10. 10 clause 10. If gratuity is received by government employees, then it is fully exempt. Okay, on death or retirement, if government employee is receiving during the service, taxable. Death or retirement la matunda, it is fully exempt. And listen, here retirement not only means retirement, here retirement also means termination, resignation, incapacitation. Termination, resignation, incapacitation. Termination means the employer has certified. Resignation means the employee himself has resigned. And incapacitation means, incapacitation theriyuma, dummy post kudukurathu. Dummy post means you are not paying any salary, you are just, the employee is coming and sitting in their organization having a respectable post, but there is no work, there is no salary. That is called incapacitation. For example, in my school there used to be our biology teacher, now he is no more. So after he retired, the biology teacher was so attached to the school, he was coming to the school for 50 long years and teaching there only. He was so attached that since after he retired, he had mental health issues by staying in his house. So his family requested the school that you please allow him to come to the school, sit in the biology lab, but don't give him any classes or salary, nothing is required. So daily he will just come to the school and sit in the biology lab. This is nothing but incapacitation. Okay. So now exemption under section 10 clause 10. See all this now you have to by heart, no other go. I have tried to make it as simple as possible, but beyond that it is upon you. There are two types of employees Kanna. Employees covered under the payment of PGA means what? Payment of Gratuity Act. Payment of Gratuity Act. Employees covered under PGA, employees not covered under PGA. If employees covered under Payment of Gratuity Act, then how to calculate the exemption? Exemption is lower of three things. Okay, the last two things very simple. Actual amount received or limit of 20 lakhs. Very simple. First one only you have to remember thoroughly. First one, 15 divided by 26 multiplied by salary 2 per month into number of years of service rounded off. Now listen carefully. So this salary 2 per month this is in the initial pages itself. I would have given salary definition 1, 2, 3 and 4. In your book there is no such concept. Only I have put this concept inside the material so that it will be easier for you to remember. Salary 2 means what? Basic salary plus DA. Basic plus DA. And it is used in only gratuity calculation. So where and all this salary is coming, that and all I have mentioned it here, so that it is easier for you to memorize and remember. So basic plus DA comes in gratuity calculation for employees who are covered under the Payment of Gratuity Act. So what is salary 2? Basic plus DA. If you want, you can write it here also, so that you need not refer that page. Your wish. Basic plus DA. This is only the salary. Multiplied by number of years of service R. R means a rounded off. So in number of years of service also there are two concepts. Number of years of service completed, number of years of service rounded off. So adu now in the I have given it in the beginning. See here, number of years of service, R means rounded off, C means completed. C means completed. It means what? Number of years rounded off means you have to round off the number of years. You have to round off the number of years. But here there is one small twist, that if it is exactly 6 months, then it should be rounded off to 0. Generally, exactly 6 months you should take next number, correct? Here if it is exactly 6 months, rounded off to 0. So listen, if it is 10 years, 4 months, so it will be rounded off to 10 years. If it is 10 years, 9 months, rounded off to 11 years. If it is 10 years, 6 months, then 10 years. So here only you have to be careful. Now completed years. Completed year means you only have to take the completed years of service and ignore any fraction. So 10 year 11 months means how much? 10 years. Completed of years of service means you have to ignore the number of months. Okay, whatever years have already completed, only that many years you have to take. Number of years of service completed. So see here. So covered under PGA, firstly 15 divided by 26 multiplied by salary. What is salary? Basic plus DA multiplied by number of years of service rounded off. Sir, how to remember this 15 by 26? Very simple. 15th August, 26th January. Okay. So 15 divided by 26 into salary 2 per month multiplied by number of years of service. First amount, second amount, and third amount is what? Limit of 20 lakhs. Whichever is lower will give you the exemption. Balance amount will be the taxable gratuity. Then employee not covered under Payment of Gratuity Act. In this 1 by 2 into average salary 3 per month. In the average salary 3 and basic plus DA terms plus commission turnover. Basic plus DA terms plus commission turnover. And all these 6 places the same definition will come. So coming here, basic plus DA terms plus commission turnover commission multiplied by number of years of services completed. Number of years of service completed. So only completed years of service you have to take. And see, listen here. Here average is given. There is difference between salary and average salary. If only salary is given, take the last month's salary. If average salary is given, you have to do the average calculation. In average calculation also there is variation in different section. In here in gratuity, you have to take the average of the 10 months, last 10 months preceding the month of death or retirement. Month of death or retirement. So for example, let's say the death or retirement happened in 11th November 2024. 11th November 2024, death or retirement happened. Now for what period you are going to take the average? 10 months before the month. So the month ends on what date? 31/10, correct? So from 31/10 onwards you will take the 10 months, previous 10 months. So it will be 1/1 to 31/10. 1st January to 31/10, you first take the entire salary for this period and then you divide it by 10. You will get the average salary. This average salary only you have to use in the calculation. Purida? So here average means 10 months preceding the month of death or retirement. Idu mattum let us solve a question so that the calculation is clear, but in maybe others I will not be able to solve questions. Illustration number 4. This illustration 2, 3, 4. Now I want you to look at the board, look at the question on the board and then solve the question by yourself. Look at the material which I have provided you, how to calculate, and please solve this quickly. அந்த கொஸ்டின் போட்டிருக்கீங்களா? PC1, TP1, R, I, F average இன்னைக்கு போடுவோம். But wherever you are doing the working, you should mention the formula. Done? Be quick. Shall we solve? Mr. Ravi retired on 15/6/2024 after completion of 26 years 8 months of service and received a gratuity of 15 lakh rupees. At the time of retirement, his salary was basic pay 50,000, DA 10,000, 60% of which was for retirement benefit, commission 1% of turnover. Turnover in last 12 months was 1 crore 20 lakhs, bonus 25,000. Compute his taxable gratuity. So we have to compute taxable gratuity. So computation of taxable gratuity of whom? Mr. Ravi. Of Mr. Ravi for assessment year 2025-26. Particulars rupees. Gratuity received how much? 15 lakhs less gratuity exempt under section 10 clause 10. 10 clause 10 na gratuity exempt, you write, that is enough. So here you are going to put working note, and finally you are going to find answer. So if it was part 1, so part C first pathukla, government employee. If he is a government employee, entire gratuity is exempt. So 15 lakhs exempt, taxable gratuity will be 0. Now let us see for employee who is covered under PGA. Heading வந்து மேலேயே போடணும், but 10A is 10 class 10 is lower of number 1. 15 divided by 26 into 15 divided by 26 into salary 2. So basic plus DA, okay, into number of years of service. Years of service rounded. So like this you have to write the formula. After writing the formula, then you do the computation. 15 divided by 26 multiplied by what is basic? 50,000. What is DA? 10,000. So 50,000 plus 10,000. No, for this basic plus DA. So DA in terms, not in terms, no need to see. Entire DA you have to take. But if you are going to the next calculation, that is not covered under Payment of Gratuity Act, there you have to take only DA in terms. But for covered under Payment of Gratuity Act, no need to take in terms or not in terms. You have to take the entire DA multiplied by number of years of service. So 26 years 8 months will become 27 multiplied by 27. How much? 650. 615. 615. Number 2 is how much? Actual gratuity. Gratuity 15 lakhs. And number 3, maximum limit 20 lakhs. So this you should put a box, then just take it to the answer, write 9,34,615, balance amount is taxable. That I am not going to do. நீங்களே பண்ணிக்கோங்க. Second one வந்து work out பண்ணலாம். Employee not covered under PGA. You should not write PGA, you should write Payment of Gratuity Act in the examination, no short forms. Gratuity exempt under section 10 clause 10 is lower of number 1 divided by 2 multiplied by average of. So average kuda eppadina you write 10 divided by 10 months average salary into basic plus DA terms plus turnover commission multiplied by number of years of completed service. So here 1 by 2 multiplied by 10 divided by 10 of how much? 50,000 plus 10,000 into 60%. 60% the terms are 60% plus 1 crore 20 lakhs into 1%. And here you can put a box in the box bracket multiplied by 26. 1%. 1% is for the entire year. So into 1 by 12. Into 1 by 12. Actually putting 10 by 12 is the better option, because here that nothing is changing in the 10 months. That is why I have put 10 divided by 10. If at all it was changing in 10 months, then for the before we have to do separate calculation, for after we have to do separate calculation. So both are correct. Into 26. So how much? 1 by 2 into this 10 cancel. How much? Hmm? 1 lakh. எவ்வளவு வருது? 66,000 multiplied by 26. Okay, which is how much? 33,000 into 26. 85,000. So 8,58,000. Second one is actual received, actual, which is 15 lakhs, and third one the maximum limit, which is 20 lakhs. So 858 வந்து போடுவோம். கரெக்ட்டா? 858. Yeah, correct. 858 is correct. 9,34,615 is correct. So you are able to manage the calculation. You have to memorize. That is the only hurdle. Now special points about gratuity calculation. Listen. Retirement gratuity to members of defense is exempt. If gratuity is received from 2 or more employers, then aggregate cannot exceed 20 lakhs. Basically, in the lifetime of the employee, the maximum exemption that an employee can take is 20 lakhs. So, if already gratuity has been received and already exempt gratuity was there, then whatever exemption has already been claimed, that you reduce from 20 lakhs, balance amount only can be claimed as exemption. In short, maximum exemption that can be claimed in the lifetime is 20 lakhs. Now let's come to pension. Pension is periodic payment received for past service after retirement. So after retirement happens, because of the past service, a fixed amount is received every single month. This is called pension. Generally, pension is in the form of annuity. Annuity means what? Regularly receiving the pension every single month or every single quarter. That is only the normal form of pension. However, if pension is received in annuity, it is fully taxable. Then what is exempt? Getting a commuted pension. If you get a commuted pension, you can claim exemption. Commuted pension means what? Commuted pension means you are foregoing your pension to receive a monthly pension so that you received a lump sum amount now itself. For example, I am receiving 10,000 rupees as pension. Now I am telling every single month, I am telling to my employer, you please don't give me 6,000. From next month onwards, you give me 4,000 itself. That is enough. But now you give me 5 lakhs as a lump sum payment. Okay. So commuting the pension. This is only called commuting the pension. I'll give you an example. You please write the example. Commutation of pension. Example. %40 of, or you can say 60%. %60 of rupees 10,000 per month pension is given up to receive 3 lakh rupees. Hence, future pension becomes 4,000 rupees per month. So, commuted pension is equal to rupees 3 lakhs. Rupees 3 lakhs. Commuted pension is rupees 3 lakhs. But listen here, when you see the workings, what is the exemption? Section 10 clause 10A, section 10 clause 10A gives the exemption for commuted pension, and it tells if it is received by the government employee, it is fully exempt, and if it is received by other than government employee, you have to see whether the employee is receiving gratuity or does not receive gratuity. If employee is receiving gratuity, he would have taken some exemption under gratuity exemption also, section 10 clause 10. That is why a lower exemption will be allowed, which is full pension into 1/3. But if the employee does not take gratuity exemption, a higher exemption will be allowed, which is full pension into 1/2. Full pension into 1/2. Now listen here. Here the word used is full pension and not commuted pension. So you have to find out what is the full pension. What is full pension? Full pension means if you give up your entire pension, how much you will receive. That is only full pension. Listen here. In my example, if I have given up 60%. So 6,000 per month I gave up. How much did I receive? 3 lakhs. If I give up the entire amount, how much I will receive? 60% I gave up. So I received 3 lakhs. If I give up the entire 10,000, how much will I receive? 5 lakhs. So full pension is equal to commuted pension divided by commutation percentage, which is 5 lakhs. In the formula just logic. If I give up the entire pension, how much I will, if I give up the entire monthly pension, how much lump sum amount I will get. That is only called full pension. So commuted pension divided by commutation percentage. So 5 lakhs. 5 lakhs is the full pension. So 5 lakhs into 1 by 3 or 5 lakhs into 1 by 2. And here you be very careful. There are two places where you can make silly mistake. Number 1, there is no salary definition. Salary definition. In exam, when you get a pension question, if at all it is mixed with a gratuity question, then for gratuity salary details will be given. So you should not get confused. What was the definition of salary for pension? There is no salary definition for pension exemption calculation. And number 2, you should also tax the uncommuted pension. Uncommuted pension. Tax the uncommuted. What silly mistake the students will do? Commuted pension they will take minus exemption. So taxable part is balance. Adu mattum taxable part kadayadu. Whatever monthly the amount is received, no, 10,000 before and 4,000 after, that also you should add to the taxable salary. So that silly mistake you should not do. Commuted pension received from annuity plan of LIC is fully exempt. Commuted pension received by High Court or Supreme Court judge is fully exempt. Now let's come to leave encashment. Leave encashment means what? Encashment of leave not availed. For example, I am eligible to get 30 days leave in my organization, but I did not take 30 days. I took only 10 days. So for that balance 20 days leave which I did not take, my organization is giving me some extra money. This only is called leave encashment. Generally, leave encashment is received during the year itself. If it is received during the year, no benefit from income tax. It is fully taxable. But if it is received during the retirement, then exemption is available under section 10 clause 10AA. 10 clause 10AA. Here also for government employees it is fully exempt. For other than government employees you have to do the calculation. What is the calculation? 10 months multiplied by average salary 3 per month. What is average salary 3? Basic plus DA terms plus commission turnover. Commission turnover. So 10 months into average salary. Listen here. Average is 10 months up to the date of retirement. Up to the date of retirement. So here how you will take average? Listen, if a person has retired on 11/11/2024, then what is the 10-month period that you are going to take? You are going to take period from 12/1/2024 to 11/11/2024 till the date, 10 months before the date of retirement. So up to 10th you have to take, correct. 11/1 to 11/1/2024 to 10/11/2024. 10 months before the date of retirement you have to take. And listen here, leave equivalent is equal to earned leave minus actual leave. Leave equivalent means what? Total earned leave means 30 days in my example, 30 days every year I am earning. That is my leave, earned leave minus actual leave, how much I took, is called leave equivalent. Here this earned leave is there, no, it can only be maximum 30 days per completed year. maximum 30 days per completed year, that is only allowed. More than that is not allowed. So for example, my employer is giving me 45 days or 40 days, but in calculation you should take only 30 days, maximum 30 days. So 30 days is the earned leave maximum minus actual leave. You will get the leave equivalent that you have to use in calculation. So leave equivalent divided by 30 multiplied by average salary. Third one is actual leave encashment, and fourth one is 25 lakhs. The limit is how much? 25 lakhs. Please work out this question also so that the calculation is clear in your mind. Be quick. See whether you are comfortable with the calculation or not. Sometimes என்ன ஆகும்னா calculate பண்ணும்போது தான் தப்பு. let's discuss. So now I am not going to write this properly. Calculation mattu let us do and see. Mr. Gupta retired on 1/12/2024 after 20 years of service and received leave salary of 5 lakhs. Other details of his salary income are basic salary, of which 1000 rupees was increased with effect from 1/4/2024. Dearness allowance is 3000 per month, 60% of which is for retirement benefit. Commission is 500 per month, bonus 1000 per month. Leave per month bonus யார் கொடுப்பாங்க தெரியல. Leaves availed during the service 480 days. He was entitled to 30 days leave every single year. You are required to compute his taxable leave salary. So taxable leave salary மட்டும் கண்டுபிடிக்கணும். Total leave salary is how much? 5 lakhs. So total is equal to 5 lakhs minus exempt. So how to find out the exempt? Lower of number 1. So என்ன பார்த்தோம்? First one 10 month into average salary 3 per month. 10 month into average salary 3 per month. First one 10 months multiplied by average multiplied by 10 month average of basic plus DA terms plus turnover commission. Okay, so here 10 months multiplied by, so average salary கண்டுபிடிக்கணும். Basic வந்து என்னது? So when has he retired? 1/12/2024 Decemberல retire ஆயிருக்காரு. So February to November is the 10 month period, correct? Before the date of retirement, since he is retiring on 1st, that is why before the date of retirement 10 months, the entire month you can take. So 10 month multiplied by, now listen here, salary is changing with effect from 1/4/2024 1000 rupees was increased. That means what? Before 1/4/2024 the basic pay was 1000 rupee less, correct? So for February and March it was how much? 4000. So basic pay is what? 4000 multiplied by 2 plus 5000 multiplied by 8, then plus dearness allowance. In terms you have to take 3000 into 60% plus 3000 into 60% into 10, correct? Plus turnover commission irukka illa, it is not there. So is equal to 10 months multiplied by, and here you have to divide by 10, correct? Divide by 10. So 10 months multiplied by how much? Hmm? 6000 round 60,000 10 into how much? 6,000. So is equal to 60,000, correct? digit சொல்லுங்க. 6600. okay, 6600. So it is 66,000, correct? Okay. Then second one வந்து என்ன? Leave equivalent multiplied by divided by 30 into average salary 3. So leave equivalent divided by 30 into average of basic plus DA terms plus commission turnover. Okay. So leave salary, leave equivalent is earned leave minus actual leave. Earned leave is how much? 30 multiplied by, for only completed years of service you have to take the earned leave. How much is the completed years of service in the question? 20 years of service. So 30 into 20 minus 480 divided by 30 into 6600, because we have already found out. Okay. So 600 minus 480 is 120. 120 divided by 30 is 4. 4 into 6600, 26,400. Okay. So 26,400. Third one is 5 lakhs, and fourth one is what? The limit of 25 lakhs. 25 lakhs. So exemption is how much? 26,400. 26,400 is the exempt leave salary. Okay. Correct, na? 26,400. Okay with the calculation? Now listen here. In the same question, would my answer change if instead of this 30 days leave every year, it was given as 45 days leave every year? Would the answer change? Answer is no. Answer is will not change, because maximum how much you can take? Only 30 days. 30 days you can take. In the next page, if at all your material also has this mistake, please change it. Actually, by mistake, older version print ஆயிடுச்சுன்னு நினைக்கிறேன். Does it have this mistake? So இது change பண்ணிருங்க. So நானும் அதே material தான் இது பண்ணிட்டேன், like OneNoteல போட்டேன், so that then and there the mistake can be corrected. So it's not 3 lakhs, it's 25 lakhs. Please change it to 25 lakhs in the next page. Done? Leave encashment from 2 or more employers. So what I told, similar to gratuity, maximum leave encashment exemption can be 25 lakhs. So if already leave encashment exemption has been taken, in the future that much amount cannot be taken. So you reduce that amount from 25 lakhs. Balance only will become the new limit. Now voluntary retirement scheme. Voluntary retirement scheme means what? Giving a scheme to the employees by which they can voluntarily retire from the organization. Amount received on voluntary retirement scheme is exempt under section 10 clause 10c, but it is exempt only if the undertaking which is giving the scheme is an eligible undertaking and conditions are satisfied. Now what are the eligible undertakings? Eligible undertaking is any company, cooperative society, central government, state government, local authority, IIT, IIM, government university, etc. Generally in exam, if the question is coming, it will be an eligible undertaking only. Right? Then what are the conditions to be satisfied? The conditions to be satisfied is given in rule 2BA. Rule 2BA. Not that important from exam perspective. Even if this question comes in exam and nothing is given about the condition, you please put an assumption that rule 2BA conditions are satisfied. That is enough. But what are the condition? Condition is number 1, the employee should have completed at least 10 years of service or 40 years of age. 10 years of service or 40 years of age. Avangalukku muttunda this scheme should be given. Only to such employees the organization should give the scheme. But this is not applicable to PSU. PSU means whom? Public sector undertaking. Public sector undertaking means what? A company in which the government is having a majority stake. It is called PSU. So this condition is not applicable to PSU. Then director of a company, cooperative society should not be eligible for VRS. Next, the purpose of the VRS should be overall reduction in the strength of the employees. Vacancy from VRS should not be filled up. After VRS is given, when those employees leave the organization, their vacancy should not be filled up using new employees. That is not allowed. Retiring employees should not be employed in any other concern with the same management. So from here you resign, but I am having a holding company, there you are coming and joining in, that and all is not allowed. Next, only allowed up to prescribed limits, the limit that we are going to study now. So these are the rule 2BA conditions. If conditions are not satisfied, then VRS is fully taxable. If conditions are satisfied, then exemption is allowed under section 10 clause 10C subject to these limits. Number 1, lower of the following. Number 1, salary 3 per month into 3 months into number of years of services completed. So salary 3 9 basic plus DA terms plus commission turnover commission. Then second one, and number of years of services completed. So here you have to take completed years of service. Second one, salary 3 per month multiplied by balance months of service left, balance months that are left in the service, actual VRS or 5 lakhs, whichever is lower. If time is there, we will try to solve a question for VRS also. If not, you please refer the question in the study material. VRS is a once in a lifetime exemption. So in gratuity and leave encashment, what did we learn? If an exemption is already availed, second time if you are getting an exemption, then you please reduce the amount of exemption which is already availed from the limit. Balance you can claim. But in VRS that is not the case. It is a once in a lifetime exemption. It can be claimed only once. Second point, not that important. Next, let's come to retrenchment compensation. Retrenchment compensation means what? See, in VRS also it is reduction in the number of employees. Retrenchment compensation also reduction in the number of employees. It is reduction in the number of employees. But in voluntary retirement scheme it is voluntary, but in retrenchment it is not voluntary. The company forces the employees to leave the organization. That is the major difference. So whenever there is retrenchment, then the company should compensate the leaving employee as per the Industrial Disputes Act of 1947. Industrial Disputes Act. If an employee is receiving compensation for retrenchment, then he can claim exemption under section 10 clause 10B. What is the maximum exemption? Number 1, compensation as per Industrial Disputes Act. Number 2, actual compensation, or number 3, 5 lakh rupee, whichever is lower. So for VRS also 5 lakhs, for retrenchment compensation also 5 lakhs. There also reduction in employees, here also reduction in employees. There it is voluntary, here it is compulsory. Okay. Generally, if this question comes in the examination, this compensation as per Industrial Disputes Act will be given in the question. If it is not given in the question, there is a formula to compute it, but it is a detailed formula. Personally, I don't want you to have that headache of memorizing that entire formula because not that important. Instead, I have made a shortcut formula. You can remember this and go. This has 90% strike rate. It might work, it might not work. Okay. If you want to memorize the entire formula, you can memorize from the study material. Now let's discuss about Provident Fund. Provident Fund. There are 4 types of Provident Fund. RPF, Recognized Provident Fund, Recognized, UPF, Unrecognized, SPF is statutory, PPF is public. Recognized Provident Fund, Unrecognized Provident Fund, Statutory Provident Fund and Public Provident Fund. We will have a discussion about Provident Fund fully, then we will break for lunch. After you come from lunch, we will have that Bangramana question, we will solve that question. Okay. So Recognized Provident Fund. Recognized Provident Fund means the Provident Fund which is recognized by the Income Tax Commissioner. It is governed by EPF and Miscellaneous Provisions Act, Employee Provident Fund and Miscellaneous Provisions Act of 1952. So if I make a fund and I make it according to the conditions that are specified in this act and I get approval from Commissioner, Income Tax Commissioner, then my fund will become Recognized Provident Fund. Unrecognized Provident Fund means Provident Fund which is not recognized by Income Tax Commissioner. Statutory Provident Fund, statutory spelling is the Statutory Provident Fund. It is governed by Provident Fund Act of 1925. Generally, Statutory Provident Fund is for government employees. The the government will deposit the provident fund PF in statutory provident fund. And PPF means what? Public provident fund. So PPF does not require any employer-employee relationship. Any person can deposit money in a public provident fund and get returns from public provident fund. Similarly, there is also another type of fund called superannuation fund, which is similar to a provident fund, but the rules are a little more stricter in the superannuation fund to withdraw the money. Superannuation fund also can be of two types: approved superannuation fund, unapproved superannuation fund. Approved means approved by income tax commissioner, unapproved means not approved by income tax commissioner. Okay, so these are the different types. Now simultaneously we are going to study the taxability of all these different types of provident funds. What happens when you deposit the money in the provident fund? What happens when employer deposits? What happens when employee deposit? What happens when interest is received? What happens on maturity? All the aspects we are going to cover together, so you will have a holistic understanding of the provisions. First, let us talk about SPF, that is statutory provident fund. Statutory provident fund, when the employer is contributing, employer contribution will not be added to salary, fully exempt. Employer contribution fully exempt, it will not be added to salary. When employee is contributing, will employee contribution ever become taxable? No, because only spending the income. It is my own income. Employee contribution, if I am contributing to PF, I am only using my money and depositing in the PF account. It is only spending my income. That is why employee contribution can never be taxable. Employee contribution will never be taxable. However, the government wants to encourage the employees to contribute. That is why if I am contributing as an employee, I will get deduction under section 80C, that is chapter 6A deductions. Okay. So ignore, because it is not taxable, but you can claim deduction under section 80C. But this deduction is only for old scheme, not there for new scheme. Interest, what about interest? Interest also fully exempt. Maturity also fully exempt under section 10 clause 11. So statutory provident fund is the best. You deposit, employer deposit also not taxable, employee deposit however not taxable, deduction is also available, interest is also exempt, maturity also exempt. Okay. Now let's come to recognized provident fund. In recognized provident fund, so this is for non-government employees. Statutory provident fund is for government employees. Recognized is for non-government employees. Here in recognized provident fund, if the employer is contributing, then if it is up to 12% of the salary 3. Salary 3 means what? Basic plus DA terms plus commission turnover. If it is up to 12% of salary 3, then it is exempt. If it is more than 12% of salary 3, excess amount will be added to the salary as taxable perks. It will be taxable perks. And here you have to be very careful, because whenever this sum is coming in the question, no, it will be given that the employer has contributed of 12% of basic salary. Basic salary. But to calculate the limit, you have to do what? Basic plus DA terms plus commission turnover. As it is from the question, you should not take the salary. You should compute the salary, you should compute the limit, and then find out whether it is within the limit or not. Okay. That silly mistake many students do in this type of question. See, now while studying everything, we are studying in depth. That is why now everything is crystal clear. But when you study and when you go to the exam hall, everything becomes a khichdi in your mind and you don't remember what provision was for what. That is why tax rates, salary, TDS. Memorize now itself. Memorize now itself. Exam time படிக்கவே முடியாது. படிச்சிட்டு உங்களுக்கு ஞாபகம் இருந்தது, you are able to write in the examination, it is your good luck. But in general, 90% of the cases, these 3 chapters, if you are not able to by heart before itself, during the exam time you can't by heart, because by hearting takes a lot of time. You have to recite again and again, then only it will stay in your mind. So exam time la please don't leave these 3 chapters for exam time. Generally students are not able to cover. Idhe mari when you take a subject like corporate law, there are all these penalty provisions, different penalty provisions. That is that does not usually, people are usually not able to remember it one day before the examination. Memorization part should be complete before itself. Now recognize provident fund. Listen, when employer is contributing up to 12% of the salary, it is exempt. More than 12% na excess amount will become taxable salary as perquisites. Next, employee contribution is never taxable, but deduction can be claimed under 80C. If interest is received up to 9.5% per annum, it is exempt. Above 9.5%, the excess amount will be taxable, but generally 9.5% tandadu. Okay. Then maturity is also fully exempt under section 10 clause 12, but there is a condition. In a condition, the employee must be a member of the recognized provident fund for at least 5 years. So at least 5 years RPF la irukkanum. If 5 years RPF la illa, before 5 years itself you are withdrawing, then the maturity will be taxable. Before 5 years if you are withdrawing, maturity will be taxable. How will it be taxable? Adu konja nerathila solren. But there are some cases where if you are withdrawing before 5 years also, it will still be exempt. What are those cases? Let us see in the previous page. So case number 1, you are withdrawing because of your ill health. Okay, so you are suffering from some big disease and you are having proof of that disease. Because of that, you are withdrawing the amount from PF, then the PF withdrawal is exempt. Second, your employer himself has discontinued the business, then also it is exempt. And third one, any other cause beyond the control of employee. So you did not have any control, you had to withdraw, there was no other option available to you, that is why you have withdrawn. In such case, it is exempt. Even if you are withdrawing before 5 years, it is exempt. Now there is one more option. Before 5 years, instead of withdrawing, let's say you are changing your employment from one employer to another employer. Okay, so you can ask your employer, new employer, to transfer your RPF or PF account from old employer to new employer. So if you are transferring your PF, no need to pay any tax because withdrawal itself not there. And one more scheme is there. You can convert that RPF into NPS, National Pension Scheme. You can convert into NPS. If you are converting into NPS also, no need to pay any tax, even though it is within 5 years. RPF withdrawal, if it is within 5 years, generally it is taxable. But if you are satisfying conditions, not taxable. What are the conditions? It is withdrawn due to ill health. Number 2, due to discontinuance of employer business. Number 3, because of any other cause beyond the control of employee. Also, when it is converted from old employer RPF to new employer RPF, that is no withdrawal. And if it is converted from old employer RPF to NPS, then also it is not taxable. Sir, how is it taxable? It will be taxable just like an unrecognized provident fund, which we are going to study now. Unrecognized provident fund. So when the employer is contributing, no need to pay any tax. Employee is contributing, you should ignore it because it is not taxable. But employee will not get any ATC deduction for unrecognized provident fund. Then what about interest? Interest also, when it is credited, it is not taxable, but maturity is taxable. Unrecognized provident fund maturity is taxable. How is it taxed? You will receive maturity amount. Okay, that maturity amount, no, you have to divide into 4 parts. What are the 4 parts? In the full maturity kulla, what is the total employer contribution? What is the total employee contribution? What is the interest on employer contribution? What is the interest on employee contribution? Other than irkom, there can't be any other component. So total maturity amount you have to divide into 4 parts. Employer contribution, employee contribution, interest on employer, interest on employee. Employer contribution is taxable under salary head of income when there is maturity. Now I am speaking about maturity. Okay, interest on employer contribution also taxable under salary head of income. Employee contribution is not taxed, and interest on employee contribution is taxable under income from other sources. Okay, so this amount no need to tax, balance amount you have to tax it under different heads of income. Same way, recognized provident fund. Recognized provident fund, what did I tell you? If it is before 5 years and you have not satisfied the condition, then it is taxable. Correct? How will it be taxable? like this only it will be taxable. But there is one small change. In a change, listen, if the employer contribution was more than 12%, the excess amount would have been taxed already, correct? If the interest was more than 9.5%, interest would have already been taxed. Such amount which is already taxed, that you reduce it and balance amount alone you need to tax on withdrawal. Parida? Now let's speak about public provident fund. Public provident fund, employer contribution, there is no concept because there is no employer. Employee contribution, it is not taxable and you can get deduction also. Interest is fully exempt, maturity also fully exempt. Now let's come to approved superannuation fund. Approved superannuation fund, employer contribution fully exempt, employee contribution ignore, interest exempt, maturity also exempt if it is received on death or retirement. What if received before death or retirement? It will be taxable like a unapproved superannuation fund. Unapproved superannuation fund, everything is the same as unrecognized provident fund. Same as unrecognized provident fund. Now what we studied now, this is first layer. First layer. Idhukku mera second layer irukku. Second layer, let me tell you. Section 17 to 7. 17 subsection 2 clause 7. Aggregate of employer contribution to any of the account in excess of 7.5 lakh rupees is considered a perquisite. Recognized provident fund, NPS, and approved superannuation fund. So three funds are there. Recognized provident fund, national pension scheme or new pension scheme, approved superannuation fund. In all these three funds combined, if the employer contribution is more than 7.5 lakh rupees, then excess amount is taxable as taxable perks. Okay. First what we saw, first layer, 12% ku mele irundha employer contribution is taxable. Now what we are seeing, 7.5 lakhs ku mele irundha excess contribution is taxable. Ana in the 7.5 lakhs la, there is recognized provident fund also, superannuation fund also, pension scheme also. Okay. Now third layer. Next layer, idhukku mele innoru layer. What is the layer? Section 17 to 7a. If any employer contribution to a fund becomes a perquisite in the hands of the employee, annual accretion on such amount by way of interest, dividend, or any other sum of similar nature shall also be considered to be a perquisite in the hands of such employee. Means what? Employer contribution, if it was more than 12% or 7.5 lakhs, excess amount will become perks. Now interest on such perks also will become perks. So interest on the excess contribution also will become perks. In next year, interest on interest also will become perks. Adhikku next year, interest on interest on interest also will become perks. This is the third layer. Now fourth layer. Okay, idhukku mele innoru layer. Adu vandu enga koduthirken? I think it's in the end. This paragraph. At the end of the salary chapter, last before page. The exemption under section 10(11), just see the board, that's enough. If exemption under section 10(11) or 10(12) would not be available in respect of income by way of interest accrued during the previous year, to the extent it relates to the amount or aggregate amount of contribution made by the person or employee exceeding 2.5 lakh rupees in any previous year on or after 1/4/2021. If the contribution of such person is in a fund where there is no employer contribution, higher limit of 5 lakhs would be applicable. So, ipo enna solranga? Employee contribution. Now we were talking about employer contribution, correct? More than 12%, more than 7.5 lakh rupees, if three funds combined, and then interest on that is also taxable as perquisite. Now let's talk about employee contribution. Employee contribution, can it be taxed? Answer is no, because it is application of income. But what is the section telling? The section is telling that maximum an employee should contribute 2.5 lakh rupees. Maximum how much? 2.5 lakh rupees. More than that, employee should not contribute. However, if employer is itself not contributing, only employee is contributing, then 5 lakhs kuda contribute pannalam. Prachana illa. But in the 2.5, if you are contributing more than 2.5 lakh rupees or 5 lakh rupees, then interest on such excess amount will also be taxable as will also be taxable as perquisites. No, in income from other sources, that will also be taxable. In employee should contribute maximum how much? 2.5 lakh rupees. If employer is not contributing, employee can contribute up to 5 lakh rupees. If employee is contributing more than this amount, then excess amount will never be taxable because that is employee contribution. The interest on such excess amount will be taxable. This is the fourth layer. Now all these four layers we are going to combine and solve a question after the lunch break. So we'll break for lunch now, 1:14, and we'll start by 2:10. Please be on time. check. Ready? Now listen. Regarding Provident Fund, what did we learn? Layer 1, 2, 3 and 4. Layer 1 learners on that. If any employer has contributed more than 12% in recognized provident fund, then the excess amount is taxable as perquisite. Layer 2, what did I tell? If in recognized provident fund, approved superannuation fund and NPS together, if the employer has contributed more than 7.5 lakh rupees, then the excess amount is taxable as perquisites. Layer 3, I told you that the interest on such amount is also taxable as perquisites, and then I also told you that employee contribution more than 2.5 lakh rupees or 5 lakh rupees, as the case may be, interest on such amount is taxable as perquisites. Not the employee contribution, interest on such employee contribution will be taxable as perquisites. Now this amount in excess of 12%, you can easily compute. What is 12% of the salary? Salary means what? Basic plus DA terms plus commission turnover. Compute the 12%, excess amount will be taxable as perquisites. In second case also, take whatever is the excess employer contribution, that can be taxable as perquisites. The third one and fourth one only very difficult to compute. In the third one, in your syllabus, a formula is given. You have to use that formula to compute the taxable perquisite. And the fourth one, you need not compute, but you have to mention how to calculate. So both we are going to discuss. Now we are going to discuss the third aspect, the interest aspect. So what is the formula? Computation of taxable perquisites. Listen here. Taxable perquisite or TP is equal to PC divided by 2 multiplied by R plus PC1 plus TP1 multiplied by R, where R is equal to I divided by F average. I divided by F average. Now what is this TP? TP means taxable perquisite. Taxable perquisite. What is PC? PC means perquisite contribution. Perquisite contribution. Then what is R? R means rate. What is I? I means income. What is F average? F average means fund average. Fund average. So now you want to find out what is the taxable perks. Taxable perks means what? The interest on the tax perquisite contribution. Perquisite contribution and amount in excess of 7.5 lakhs. So perquisite contribution is the amount in excess of 7.5 lakhs. On this amount, in excess amount, you have to find out what is the interest related to this amount. That is only taxable perks. This taxable perks ku dhaan formula irukku. PC divided by 2 multiplied by R plus PC1 plus TP1 multiplied by R. Okay. Let us solve a question in your study material. You will have more clarity. Illustration 10. Illustration 10. Okay. And listen here, one more thing I forgot to tell. TP1 and PC1, that I didn't discuss. No. Listen here. What is PC1 and what is TP1? PC1 and TP1 means from the start of this provision, when did this provision start? 1/4/2020. From 1/4/2020 onwards till the preceding previous year, that is till previous year 23-24, what is the total TP will be called TP1, what is the total PC will be called PC1. Okay, listen to me once again. What is PC? Perquisite contribution. Perquisite contribution means what? Amount in excess of 7.5 lakhs. Okay, then what is TP? TP means taxable perquisite, that is the interest on the perquisite contribution that you are going to find, taxable perquisite. Then what is PC1? PC1 means before the previous year 24-25, in all the years, what was the total PC? That is only PC1. Okay, before previous year 24-25. And then what is TP1? Before the previous year 24-25, in all the years, what is the total TP? Is only called TP1. TP1. And what is R? R means rate. Rate formula is I divided by F average. So income of the funds divided by average of the funds. That is only rate. Now we are going to find out. Practically solve this question. After solving, you will have a clarity. Question paakradhukku looks like a small question, but actually it is a big question. Mr. X is appointed as a CFO of ABC Limited in Mumbai from 1/9/2022 onwards. His basic salary is 6 lakhs per month. He is paid 8% as dearness allowance. He contributes 10% of this pay plus DA towards his RPF, and the company contributes the same amount. The accumulated balance in the RPF as on 1/4/23, 31/3/24 and 31/3/25 is given respectively. Compute the perquisite value chargeable to tax in the hands of Mr. X under section 17(2)(7) and 17(2)(7)(a). 17(2)(7) talks about PC, 17(2)(7)(a) talks about TP. Okay, perquisite contribution and taxable perquisite on this perquisite contribution. For the assessment year 24-25 and 25-26, prior to 1/9/2022, he was a consultant whose professional fees was taxable under the head PGBP. So earlier he was a professional, then 1/9/2022 he joined the employment. Now for previous year 23-24, that is assessment year 24-25, you have to find out the answer. Assessment year 25-26 also you have to find out the answer. 1 year I am going to solve, the next year you are going to solve. So first listen. We have to first find what is PC and TP, correct? PC and TP. Now perquisite contribution, PC. First let us put value of perquisite for assessment year 2024-2025, 2024-2025. okay, இதுக்கு வந்து நாங்க கண்டுபிடிக்க போறோம். What is perquisite contribution? So perquisite contribution is equal to employer contribution to RPF plus superannuation fund plus NPS in excess of rupees 7,50,000. okay, so what is the total employer contribution? Employer contribution So what did they tell? Employer contribution is how much? 10% of his pay and DA is equal to 10% of basic pay plus DA, dearness allowance, is equal to 10% of what is the basic pay? 6 lakhs. When did he join the employment? 1/9/2022. Now for which year we are finding? Assessment year 24-25. It means what? Previous year 2023-2024 means 1/4/23 to 31/3/24. During this year, was he employed for the entire year? No, aisa. When did he join? 1/9/2022. So during 23-24, was he employed for the entire year? Answer is yes. He was employed for the entire year. That is why 10% multiplied by, so 6 lakhs into 12 plus DA. DA is what? 8% of 8% dane. 8% of basic pay is DA. So 6 lakhs into 8% into 12. போடுங்க. How much? check. எவ்வளவு வருது? 7,77,600. So 7,77,600. Is this amount more than 750? Answer is yes, it is more than 750. Therefore PC is equal to 777,600 minus 7,50,000, which is how much? 27,600. So this is the PC for assessment year 24-25. Assessment year 24-25 ku idha perquisite contribution. Now we have to find TP, taxable perquisite. Taxable perquisite is equal to in a formula PC divided by 2 multiplied by R plus PC1 plus TP1 multiplied by R. So PC divided by 2 multiplied by R plus PC1 plus TP1 multiplied by R. Okay. Now one by one we are going to find out all the figures. PC is equal to what? 27,600. We already found out. Then R is equal to I divided by F average. What is I? I is the income from the funds. Income from the funds. How will you find income from the funds? Is it given in the question? Answer is no. It is not given in the question. So how can we find out? What is given in the question? The closing balance of funds on the various dates is given in the question. With that, can we find out the income? Answer is yes. Because from the closing balance, that is the total fund value, let us remove the opening balance. Let us remove the contribution. Let us remove the employee contribution also. The balance amount will be what? Income. Okay. So income is equal to closing balance minus opening balance minus employer contribution minus employee contribution. Okay. அப்படி நீங்களும் எழுதிட்டே போங்க. You write also, understand and write together, because same way I want you to solve for the next year. So I is equal to closing balance minus opening balance minus employer contribution minus employee contribution. Now what is the closing balance? Closing balance as on what date we should see? 31/3/2024 we should see, because assessment year 24-25 பண்ணிட்டு இருக்கோம். Okay, so 31/3/2024, what is the balance? See here, it is 27,43048 and opening balance is what? 981,137. So you will put no 2743048. 2743048 minus how much? 981137. 981137 minus employer contribution 777600 minus employee contribution 777600. Correct? Because both employer and employee are contributing same value. Please tell me the answer quickly. 711. 206,711 is the income from the fund. Okay, income from the fund. Now we want F average. F average means what? Fund average. So average how we will find? Opening plus closing divided by 2. So opening plus closing divided by 2 is equal to 2743043 plus 981137 divided by 2, which is how much? How much? 18,62,093. Now what is R? R is equal to I divided by F average. So 206,711 divided by 18,62,093 is equal to 0.111. 0.111. So R is equal to 0.111. Now what should we find? TP1 and PC1. First we will find PC1 because that is easier to find. PC1 is equal to what? Before this year, before the previous year 23-24, from 1/4/2020 till 31/3/2023, what was the total PC? That is only PC1. That how to find? In the question it is given that the person has joined only from 1/9/2022. So before 22-23 there will not be any PC. That is why 22-23 if you find the PC, that is enough. How to find the PC for 22-23? So PC is equal to what? Employer contribution greater than 7.5 lakh rupees. So PC1, let us find what is the total employer contribution. So first, what is the employer contribution? How much percentage is it? 10%. Correct. So 10% of basic plus DA. Correct. 10% of basic plus DA is contributing. Employer is also contributing, employee is also contributing. So 10% of what is basic salary? 6 lakhs. 6 lakhs multiplied by how many months? He has joined in September. So 9, 10, 11, 12, 1, 2, 3, 7 months. 6 lakhs multiplied by 7 plus 6 lakhs into 8% multiplied by 7. Now tell me the answer. Ten percent vandu 453600. Okay. If you take 10%, it will be how much? 4,53,600. Hence, PC1 is equal to 7,50,000. Sorry, PC1 is equal to 0. Since there is no amount excess of 7,50,000, hence PC1 is equal to 0. Since PC1 is 0, TP1 is also 0. Because TP1 is what? Interest on PC. That is only TP. Interest on PC. When there is no PC, there can't be any TP. Correct? There can't be any TP. Since PC1 is 0, since there is no excess contribution, there can't be any interest on excess contribution. That is why interest on excess contribution is also 0. Now find out the answer. TP is equal to PC divided by 2. What is PC? 27,600. 27,600 divided by 2 multiplied by R 0.111. What is the answer? 1532. So TP is equal to 1532. So in this first year we have found out PC is 27,600 and TP is 1532. Okay. Any doubt in this? Ask me now itself. புரியுதா? எல்லா இது formula substitute பண்ணனும். You have to by heart the formula, substitute everything inside the formula, you will get the answer. Now for the next year, that is previous year 24-25 or assessment year 25-26, you will have TP1 and PC1. What is TP1? 1532. What is PC1? 27,600. For the next year. Now you solve the answer for the next year. Please solve the answer for the next year in your notebook. Question? Please solve. And be quick. Now it is easy. You just have to substitute the numbers inside the formula and solve the question. Then able to understand? So here also TP, what is PC? PC is equal to 27,600, because in assessment year 25-26 also the salary, DA, everything is same, so you need not recalculate. 27,600. Now we are doing for assessment year 25-26, correct? So it is same. Now TP is equal to, what is the formula? TPC divided by 2 multiplied by R plus TP1 plus PC1 multiplied by R. So here PC you already know, R you have to find. R is equal to I divided by F average. So what is I? I is equal to, what is the closing balance? 4648,555. 4648,555 minus 2743048. 2743048 minus 777,600 minus 777,600. How much? 350307. Now F average. F average is equal to 4648,555 plus 2743048 divided by 2 is equal to R is equal to 350307 divided by 3695802 is equal to 0.095. So I also, now we can substitute everything in the formula. So TP is equal to 27,600 divided by 2 multiplied by 0.095 plus TP1 1532 plus 27,600 multiplied by 0.095. Okay, what is the answer? 4078.54. 40 இது வரலையா, வேற ஏதோ வருதா? I have not checked. 4078.54. Any confusion in this calculation? All clear? 4078.54. சிங்கன வருது. Okay, institute oda sumla வந்து they have taken 4 decimal places, அதனால 4078 நம்மளுக்கு வருது, instituteக்கு வந்து 4069 வருது. Not a problem, no problem. Even if you do 3 decimals you will get the marks, not a problem. Okay, so this question is done, but still this question is not done, because listen, here employee contribution is also there. Employee contribution is more than 2.5 lakh rupees. Hence, on the excess contribution that is more than 2.5 lakh rupees, the interest will arise. That interest is taxable. Hence, you have to write in the examination that in the previous year 22-23 income the contribution in excess of 2.5 lakh rupees, which is how much? First evlo contribute pannanga? 4 lakh something, no? 453,600 contribute pannanga, correct? So in previous year 22-23, 453,600 minus 2.5 lakh rupees is how much? 203,600, correct? Interest on this 203,600 will become taxable. Next year la vandu how much did they contribute? 777,600 minus 2,50,000 is how much? 527,600. 527,600. On this 527,600 also, whatever will be the interest, that will be taxable, and interest on 203,600 will also be taxable. Interest on interest will also be taxable, and this will continue. So how to write this in the examination if at all this comes like this? See here, Interest on aggregate of the following will also be chargeable to tax during the assessment year 25-26. 203,600, that is employee contribution exceeding 2,50,000 during 22-23. 527,600, employee contribution exceeding 250 23-24. 527,600, employee contribution exceeding 250 during 24-25. Interest accrued on 203,600 being excess employee contribution. Interest accrued on 527,600 being excess employee contribution in 23-24. So all this also will be taxable. You need not calculate everything, but you have to mention that all this will be taxable. Okay. I hope you are clear with the provident fund provision. Now we will jump to allowances. Today at least provision part I want to complete, and I am planning to complete the sums also. Let us see how much we are able to do. Let's come to allowances. Allowances. In salary chapter, there are exempt allowance, partly exempt allowance, taxable allowance. Listen. Exempt allowance, partly exempt allowance, and taxable allowance. Fully taxable allowance is there, no? That I am not going to teach. Because exempt, partly exempt therinjanda, whatever other name which you have not studied is taxable. So taxable allowances I am not going to take. First, what are the fully exempt allowance? Allowance I have already told you, no, it is a fixed amount given by the employer to the employee for a specific purpose. It does not matter whether the employee is spending the amount or not. If an allowance is given to High Court or Supreme Court judge, it is fully exempt. Compensatory allowance given to judge as per Article 222 of the Constitution is fully exempt. Allowance given by United Nations Organization is fully exempt. Even salary given by United Nations Organization is fully exempt. Section 10 clause 7. 10 clause 7 we studied yesterday itself in residential status chapter, where I told you if the Indian government is paying allowances or perks to an Indian citizen outside India, then it is fully exempt. So 10 clause 7 allowances is exempt. Specified allowances to present or retired chairman or member of UPSC is also exempt. All these are does not come in practical, maybe in multiple choice question. Now let's come to partly exempt allowances. Partly exempt allowances we are going to learn in 3 stages: 10-14-1, 10-14-2 and 10-13A. 10-14-1, 10-14-2 and 10-13A. What is the difference? In 10-14-1, whatever allowances we study, they are exempt to the extent of utilization for official purpose. So if I receive 5,000 as allowance and if I spend 3,000 for official purpose, 3,000 exempt. Balance amount 2,000 only taxable. Purida 10-14-1. Ana 10-14-2 la vande 10-14-2 la it is given, some limits are given. So if the allowance is up to that limit, it is exempt. If it is more than that limit, na limit amount will be exempt, excess amount will be taxable allowance. Then last one is house rent allowance, that is a separate discussion. House rent allowance. So first we are going to learn allowances that are partly exempt for official purposes. What are these allowances? There are 6 allowance: conveyance allowance, uniform allowance, research allowance, daily allowance, helper allowance and travelling allowance. Conveyance allowance means what? Travelling within the city for official purposes. For example, you are working in a CA office, you are getting conveyance allowance for travelling from office to client place. So within the city you are travelling from your office to client place for official purposes, that is conveyance allowance. Next, uniform allowance. This is for specifying uniform. Uniform allowance is allowed as exempt only if the amount is spent to stitch the uniforms or to buy the uniforms. Balance amount is taxable. Research allowance is given to research institutes, is given in research institutes to the employees for doing the research. If employees are using it for research, amount spent is exempt, balance amount is taxable. Then daily allowance. If at all you are going out of town, then you will receive daily allowance. That allowance is for meeting the day-to-day expenses out of town. For example, hotel expense, restaurant expense, etc. Helper allowance. An allowance which is given to have a helper for office work, not a domestic help. Helper for office work, then the amount spent to hire that helper is exempt, balance amount will be taxable. Then traveling allowance means traveling to other cities for official purpose. So whatever amount is spent on travel will be exempt, balance amount will be taxable. Okay, so these are 6 allowances that are exempt only to the extent of the amount spent on official purpose. Next, other allowances, section 10.14.2. In 10.14.2, no, I have divided into 2 parts, set A and set B. These 2 parts you will not find in the study material. Why have I divided? Because set A is most frequently asked in examination, set B is not that frequently asked in examination. So set A comparatively important, set B have a glance but not that important. So number 1, tribal area, scheduled area, agency area allowance. It is given to the employees who are staying in such area. It is exempt up to 200 per month. More than 200 are in the balance amount is taxable. Transport system allowance, daily allowance given to transport system employees. Transport system employee na, for example bus driver is going from one city to another city. In another city he is getting daily allowance, that is called transport system allowance. So daily allowance means what? Day to day expenses. இதுக்கு வந்து லிமிட் என்ன? 70% of the allowance or 10,000 per month, whichever is lower. 70% of allowance or 10,000 per month, whichever is lower. Then transport allowance. Transport allowance means going from home to office, office to home, home to office, office to home. This allowance is exempt only for specially abled employees, blind, deaf, dumb, handicapped. Only for specially abled employees. Maximum limit is 3,200 rupees per month. Next, underground allowance is given to an employee who is working underground. Maximum 800 rupees per month is exempt, balance amount is taxable. Children education allowance is given for the education of employees' children. 100 per month per child, maximum 2 children is exempt, balance amount is taxable. Hostel allowance, 300 per month per child, maximum 2 children. Hostel allowance how much? 300 per month per child, maximum 2 children is exempt, balance amount will become taxable. Now let's come to set B. Set B, hilly area allowance. An employee living in the hilly area, depending on the hilly area, it is either 800 per month or 300 per month or 7,000 per month. Different areas ku different allowances there. Not that important. Next, all the below allowances are for armed forces. Island duty allowance, working in a island, giving duty in a island. So 3,250 per month, maximum exemption, balance amount taxable. High altitude allowance. High altitude means living in a hilly region in a very high altitude. So temperature will be very cold. If the altitude is from 9,000 to 15,000 feet, maximum exemption is 1,060 per month. If it is more than 15,000 per feet, then maximum exemption is 1,600 per month. Then border area, remote area, disturbed area or difficult area allowance, depending on the area, allowance is given. இந்த மாதிரி பாயிண்ட் எல்லாம் क्वेश्चनல வரவே வராது, எப்படி தான் கேள்வி கேக்குறது. ஓகே, compensatory field area allowance. Compensatory field area allowance maximum 2,600 per month. Compensatory modified field area allowance. Field area means what? Going to the field in warlike situation. So 1,000 per month. Then special compensatory highly active field area allowance. So warliye போயிட்டாங்க, 4,200 per month. Counter insurgency allowance. Within the state or within the border itself, insurgency has happened. So the military is controlling the insurgency. For that they are getting allowance. That is 3,900 per month maximum. Okay. This class I will go in detail about all meaning of all this. Now it is not that relevant from exam point of view. அதனால ரொம்ப இத பத்தி பேசல. So now 10.14.1 we have discussed, 10.14.2 we have discussed. All these exemptions are there, no, are allowed only in the old scheme, not allowed in the new scheme. But in the new scheme only four allowances are still exempt, same as the old scheme. Ennadu? It is daily, conveyance, traveling and transport. Daily, conveyance, traveling and transport are the 4 allowances which are exempt in the old scheme as well as new scheme. Rules are the same. இது வேணா remember பண்றதுக்கு you can have one இது you can write this special transport to office night only I was thinking something I should give to remember this particular section. So I thought of this only. Maybe you have something better. நீங்களும் எனக்கு சொல்லுங்க, நான் next time அது teach பண்றேன். So special transport to office. Mainly what my concern is that the students get confused as to transport means what, travel means what, conveyance means what. It gets confused inside your head. So to clear that confusion as well as to remember what are the 4 allowances that are allowed in both old scheme as well as new scheme, I have come up with this. What is this? Special transport to office. So coming to office, office to home, that is called transport allowance. It is allowed only to specially abled employees, maximum 3200. So limit இருக்கிறது வந்து first சொல்லிட்டேன். Special transport to office, maximum 3200 per month. Then conveyance to client place. So within the city if you are traveling, it is called conveyance allowance. Then third one, traveling out of town. So travel allowance means what? Traveling from one city to another city. And fourth one is daily allowance. So for staying there, staying out of town, you will get an allowance that is called daily allowance. So special transport to office, then conveyance to client place, travel out of town, daily stay there. Special transport to office, conveyance to client place, travel out of town, daily stay there. So these 4 allowances, transport, conveyance, travel and daily, are allowed for both old scheme as well as new scheme. Both old scheme as well as new scheme. That is why important to remember this, because if at all you get a comprehensive question on salary, high chances that they will ask you to compare between old scheme and new scheme. So you should be knowing old scheme and new scheme la period differentiation is in the salary chapter only. That is why very important. Now let's come to house rent allowance. Section 10 clause 13a. House rent allowance, HRA. HRA is not allowed in the new scheme, not allowed in 115 BSc. It can be claimed as exemption only in the old scheme. So what is the exemption of HRA? It is given under section 10 clause 13a. Lower of the following: 40% in case of non-metro, 50% in case of metro city. Metro means what? MDCK. Mumbai, Delhi, Chennai, Kolkata. There are other metro cities also, but in income tax there are only 4 metro cities: Mumbai, Delhi, Chennai, Kolkata. Multiplied by salary 3. Salary 3 na basic plus DA terms plus commission turnover. Plus commission turnover. So 40% of the salary or 50% of the salary you take. 50% in case of metro city, 40% in case of non-metro city. Then second one வந்து actual HRA received from the employer, and third one வந்து total rent paid minus 10% of salary. Rent paid minus 10% of salary. So in the 3 combine பண்ணிட்டு whichever is lower is the exemption. Balance amount is taxable HRA. Total HRA minus exempt HRA is equal to taxable HRA. Above exemptions shall be seen only for the relevant period. Where relevant period means the period for which the accommodation was occupied by the employee. Listen here. We have seen now salary. The salary means evlo salary edukano. The entire period for which the employee is there staying in the accommodation. That much salary you have to take. That many months salary you have to take. Similarly here also same thing. In the first point also you are taking salary. So how many months salary to take? If employee is staying in the accommodation for 11 months, take 11 months salary. For entire year, take entire year salary and do the calculation. In this HRA, I want you to look at the question. Maybe after going home, because of the time illa, after going home you can look at the question number 1 from the study material. Adu neenga paathutingna, then your HRA will be thorough. And the question purinjiruchna. Exercise 1, as far as I remember, question number 1, Mohit is employed. Idla HRA irukka? Yes, this Mohit question is there, no? Please try to solve this question when you go home regarding house rent allowance. If you see the answer itself, see, for April to May different calculation, June to October different calculation, November to December, January, February, March, all separate calculation of HRA. So nalla practice ayiru indha or question solve pannirunga. But it will take quite a long time. That is why we are not doing it in class. But please go home and at least see this question once. At least see this question once for house rent allowance calculation. So allowances with this over. We are not going into taxable allowance. Exempt, partly exempt paathachu adu podum. But we will go into perquisites. Perquisites. Sir, in perquisites also, shall we study only the exempt perquisite? Need not study the taxable perquisite? Answer is no. Here you have to study the taxable perquisite also, because in perquisite, for different type of perquisite, there is different type of calculation, even though it is taxable. Hence you have to know how that calculation is done. That is why perquisite very important. So perquisites also similarly 3 types kanna: fully exempt, partly exempt and taxable. Fully exempt vandu enadhu? Number 1, telephone or mobile bill paid by the employer. So employer is paying the mobile bill of the employee for official purposes, fully exempt. Tax paid on non-monetary perquisites. I told you before itself while starting the salary chapter. If employer is paying the tax of the employee, that tax is also perquisite. Correct? However, in that, if tax is paid on non-monetary perks, then it is not perquisite. For example, I am the employer, I am giving car to my employee. For that car is a perks, correct? On that car, some tax will come, that perks value some tax will come, that tax I will pay. Now I am paying this tax, no, in the tax mele tax varadhu. Purinjudha? Non-monetary perks mele tax katna, and the tax mele tax varadhu. Okay? Tax on non-monetary perks is exempt. Section 10 clause 7, already discussed. If Indian government is giving allowances or perquisite to Indian citizen outside India, it is fully exempt. Next, if conveyance is given to High Court or Supreme Court judge, it is fully exempt. If goods are sold at a reasonable price to the employees, then also it is exempt, need not have any perks. For example, I buy this pen for 30 rupees, I sell it for 50 rupees, my margin is 20 rupees, and to my employee I am giving it for 35 rupees. Then I am selling it as a reasonable price, even though it is discount compared to market, but still I am selling it as a reasonable price. That is why no need for perquisites. If transport facility is given to employees, it is fully exempt. From home to office, office to home, transport facility is given. It is not taxable in the hands of employee. Okay? But if transport allowance is given, is it taxable? Answer is yes. For whom is it exempt? For specially abled. How much is exempt? Maximum 3,200 rupees per month. Facility kudutha ellathukku exempt. Allowance kudutha specially abled ku mattum da exempt, maximum 3,200 per month. Then training of employees including boarding and lodging. Example, management refresher course, that is also fully exempt. If I join ICICI Bank will ask me to come to Hyderabad for a 3-day course to learn about the bank's operation. So it will sponsor my ticket from Chennai to Hyderabad, Hyderabad to Chennai, and my stay in Hyderabad. All this is not taxable for me. Okay? No. Partly exempt. So partly exempt, we are going to see 6 categories. Leave travel concession is the first one. Leave travel concession is the first one. And listen here, one common rule one common rule for all the perquisites that you have to follow. If any amount is recovered from the employee, then that should not be added to perquisites. For example, I am giving some facility to the employee. Maybe that facility cost 1 lakh rupees, but I am receiving 10,000 rupees from the employee. 90,000 rupees I am only bearing. So how much is their income? 90,000, because 10,000 pay pannitaangala. So 90,000 is only their income. This I am not, again and again I am not going to tell you. You have to know that for all the perquisite calculation, if the employer gets any amount from the employee, then such amount has to be reduced from the total value. Balance amount only is the taxable perks. Leave travel concession. First one, leave travel concession only allowed in old scheme, not allowed in new scheme. What is leave travel concession? The employer is sponsoring the leave travel, that is to and fro expense, traveling expense for their employees. What is the exemption? If the employee is traveling by air, means what? Aeroplane. Then what is the exemption? Economic fare of national carrier, that is Air India, or actual expense, whichever is lower, is the total exemption. If the employee is traveling through any other mode, see, any other mode means what? Train irukkalam, cab irukkalam, bus irukkalam, eppadi vena irukkalam. Okay, any other mode. In such case, you should see whether rail service is available for that travel. For example, he is sponsoring my travel from Chennai to Delhi. Okay, maybe I am going from Chennai to Delhi in cab. It does not matter. But what you have to see, whether railway is available from Chennai to Delhi. Is it available? Answer is yes. Is it available? Yes. So what you should see, first class railway fare from Chennai to Delhi and compare it with actual expense. What is the actual expense? Cab expense. Purida. Compare with actual expense, whichever is lower is exempt. Whichever is lower is exempt. Sir, what if railway service is not available? In such case, see whether recognized public transport system exists. It means what? Government bus. Government bus is there. In the government bus, you have to see what is the deluxe class fare. So deluxe class fare or actual expense, whichever is lower, will be the exemption. Then if recognized public transport system also does not exist, then what to do? For a similar distance, how much will be the first class railway fare that you have to take, or actual expense, whichever is lower. Okay. So air in the economy airfare or actual expense, whichever is lower. Air illana, see whether railway exists. If railway exists na, railway or first class fare. Railway exists illana, whether government transport exists. In such case, deluxe class fare. Adum illana, similar distance ki railway, how much is the fare you have to take. Compare it with actual expense, whichever is lower will be allowed as exemption. So this ticket can be taken for whom? This ticket can be taken for employee also, employees, family members also. Who are family members? Family member means spouse plus children and parents, brothers and sisters if dependent on the employee. So employee, spouse, children. Parents, brothers, sisters if they are dependent on the employee, their ticket also can be taken as exempt. Parents, brothers and sisters. Now in children, there is one rule. In 1998, so population control was becoming a problem, and as usual, if the government faces any problem, then the best way to solve the problem is introduce one provision in the Income Tax Act or GST Act. Like that problem will naturally get solved inside the country. Okay, so to solve the problem, what did they tell? Oh, population increase agada. Inimail vande, we will not give LTC benefit to the parents who are having more than 2 children. Up to 2 children, we will give the benefit. That to 2 children vande, before ethanavana children irkalam, does not matter. After 110/1998, maximum 2 children. So before 110/1998, how many ever children? Not a problem. After 110/1998, only 2 children. That also, there also, if first you have one child and in the second, while having the second child, you have multiple births, means twins are born or triplets are born, then for all such children in the second birth, it is allowed, not a problem. But after 110/1998, first time la vande multiple births, twins are born, and then second time the third child is born. Then for the third child, is it allowed? Not allowed, because first day you have 2 children, no? So second time we will not allow it. So exception, multiple births after one child born on or after 1/10/1998. Maximum 2 children born on or after 1/10/1998. This not that relevant, but still examiner one of the favorite questions. So be thorough with LTC. LTC is available for 2 years in a 4 calendar year block. Here I want you to change this 31/3. It's actually 31/12. 1/1/2022 to 31/12/2025. Okay. So இப்போ block என்ன நடந்துட்டு இருக்கு? 2022 to 2025 block நடந்துட்டு இருக்கு. One blockல 2 times LTC exemption can be claimed. Sir, what if I did not claim LTC exemption, or instead of 2 times I claimed only 1 time? Then what to do? One LTC you can carry forward to the next block. So next block you can claim 3 times LTC benefit. Sir, I did not take LTC benefit at all, but I had 2 chances. No. So now can I carry forward 2? Answer is no. Maximum you can carry forward 1 only. 1 LTC can be carried forward to next block. So if one or both LTC not availed in the entire block, 1 LTC can be carried forward to next block. LTC to High Court Supreme Court judge is exempt without any condition. Now this is very important. Trick question vandu varala. LTC is applicable only if travel is within India. Travel should be within India. LTC can be given after retirement or termination of service also. Okay. So LTC clear. Now we'll go to medical facility. Medical facility. Now listen. Now in medical facility also, in some, if the employer takes care of the medical treatment or medical insurance of the employee, certain cases are exempt, certain cases taxable. What and all is exempt? Let us see. Number 1, treatment done in India. Treatment done in India. First we will see how to claim the exemption, what and all is exempt. Number 1, if the employer himself has a hospital, employer itself has a hospital, in that hospital if the treatment is done, then the treatment is fully exempt. Next, government hospital. If the employer is getting treatment of the employee in government hospital, the treatment is fully exempt. Employee need not pay any tax on it. Next, if the disease is a prescribed disease. Sir, what are all prescribed diseases? Question la vandu prescribed disease nu kuduthirukanga. Don't worry. If the disease is a prescribed disease and medical certificate has been obtained, then for such prescribed disease, if you are getting treatment in a non-government hospital also, private hospital also, no problem, the treatment will be fully exempt in the hands of employee. இப்போ என்ன பார்த்துட்டு இருக்கோம்? Employer வந்து treatment sponsor பண்றாரு. All these conditions we are seeing. Next, COVID-19. When COVID-19 broke out, at that time the hospitals were not sufficient to fill up the number of patients. That is why, subject to condition, even COVID-19 patients can get treatment in other hospitals other than government hospitals. What are the condition? Number 1, COVID-19 positive report should be there. Number 2, necessary document of diagnosis or treatment within 6 months of the positive report. So when COVID-19 positive report came, within 6 months the treatment should have been done, and certification in respect of all the expenditure. And the expenditure claimed alla genuine ah irukku certificate venum. If all these 3 conditions are satisfied, then if employer is taking care of the COVID-19 treatment of the employee, then also it is exempt. The treatment is exempt. Okay. Now listen here. Who can claim the exemption? The exemption can be claimed by employee and family members of employee also. Who are family members? Spouse, children, parents, brothers, sisters, if dependent. But this is medical reason, no? So no limit on the children. So same as LTC, but without any limit on the number of children. So spouse, children, parents, brother, sister is if dependent. Very important, because in the medical facility, if at all it is coming in the examination, it will be like small adjustments. Multiple 10 or 15 items will be given. For all of them you have to know whether it is taxable or exempt, then final answer you have to write. Okay. So spouse plus children plus parents, brother, sister if dependent on the employee. In such case, if treatment is done by the employer and the conditions are satisfied, then the entire treatment can be claimed as exempt. It is exempt. Now let's talk about treatment outside India. If employer is sponsoring the treatment of the employee and treatment is done outside India, then what to do? What is exempt? What is taxable? Listen. The treatment can be for employee also. Treatment can be for employee's family member also. Who is family? Spouse, children, parents, brothers, sisters if dependent on the employee. In such case, for one patient and one attendant. Foreign country means attendant will also go, no? One patient and one attendant, treatment and stay. Treatment expense and stay expense. Traveling illa. Treatment and stay matunda. Actual expense or RBI limit, whichever is lower, will be exempt. Now what about travel? Traveling expense will not be added to salary only if if GTI of the employee is up to 2 lakhs. Gross total income of the employee should be up to 2 lakhs, which is very, very rare case, but still this rule is there. So if it is more than 2 lakhs, what will happen? This entire travel expense will be added to the salary of the employee. Okay. Now let's come to insurance. Exempt insurance. If health insurance is paid by employer for the employee, completely exempt. If health insurance is paid by the employee but reimbursement is done by employer, that is also exempt. If employer is taking personal accident policy, that is also exempt. And if there is a staff group insurance scheme which is taken by the employer where the entire group of employees together he is paying an insurance premium, that is also exempt in the hands of employees. So 4 exemptions irukku. Number 1, health insurance which is paid directly by employer, reimbursement of health insurance by the employer, personal accident policy, staff group insurance scheme, all these are exempt. And in case of reimbursement, it can be for employee plus family. For example, I have taken mediclaim for myself and my family together, single mediclaim plan, mediclaim plan. Adukku I am getting reimbursement from my employer. This amount is not taxable. Okay. But trick question. இதுதான் கேட்பாங்க எக்ஸாம்ல. Life insurance paid by employer. Life insurance paid by employer is fully taxable. Okay. Life insurance is fully taxable. And this also generally comes in exam. Students get confused. They give nursing home or dispensary. Nursing home and dispensary is also hospital only. Okay. Nursing home and dispensary is also hospital. Now clear with medical. Now let's go to education. Education perquisites. If employer is sponsoring the education of employee, then such education is fully exempt. In the education vena irukkalam, enga vena irukkalam, onnu prachana illa, fully exempt. Employer is sponsoring the education of employee. Next, if employer is sponsoring the education of employees' children, then exemption can be claimed subject to condition. In a condition, number 1, value of education should be up to 1000 per month per child. Value of education should be up to 1000 rupees per month per child. Nowadays, ivlo fees irukka, LKG la pona kuda the fees is more than 12,000 rupees per annum. Per annum is 12,000 rupees, no, 1000 per month per child. So nowadays this is not that helpful for claiming exemption. Number 2, the school should be either employee's own institution or a tie-up institution. Means what? For example, Delhi Public School is there. Delhi Public School is having teachers as their employee. Now teacher or children are studying in Delhi Public School and Delhi Public School is sponsoring their education. So employer is sponsoring education of employees who are studying in the employer's organization. Then if the value is up to 1000 per month per child, it is exempt. If value is more than 1000 per month per child, taxable. Number 2, it should be a tie-up institution. Okay. For example, the Tata Group might have a tie-up with Delhi Public School. So whoever are the children of the Tata Group employees, the children can study in Delhi Public School for free. Appadinnu there can be a scheme. In such case also, if they are studying for free, if the value is up to 1000 per month per child, then such education is exempt. It will not be added to taxable perks. Ana, if it is more than 1000 per month per child, then entire value is taxable. Up to 1000 exempt, adhikku mele taxable, appadi kediyadu. Entire value taxable. Listen, in salary there are 3 places where till date there is a confusion whether if the limit crosses, should we tax the entire value or should we tax only the excess value? Innum confusion irukku. So in all the 3 cases, நம்ம என்ன பண்ண போறோம்? We are going to tax the entire value. Fine. In institute also, in most cases, it also taxes the entire value. So this is one such case. The first case, if the education value is more than 1000 per month per child, the entire value of education you add it to perquisite. Please don't reduce 1000 per month per child. Allah panna vendam. Sir, if the employer is sponsoring education of any person other than employee or children, then it is fully taxable. Okay. So spouse or education sponsor பண்றாங்கன்னா, that is also taxable. Now listen, if education is taxable perquisite and if it is employer own institution, then value of perks shall be the cost of such education in the same locality. This is a little illogical, but still this rule is there. For example, I am Delhi Public School. Okay, my employees children can study in Delhi Public School for free. Okay, now you have to see whether cost of education is 1000 per month per child or within that or not. Correct? For seeing 1000 per month per child, logically நீங்க என்ன பாப்பீங்க, whether Delhi Public School to other children எவ்வளவு charge பண்றாங்கன்னு பாப்பீங்க. கரெக்ட்டா? But in the caseல வந்து you should not see Delhi Public Schools cost of education, you should see cost of education given by other school in the same area. Given by other schools in the same area. Suppose other school in the same area வந்து questionல கொடுக்கலனா, then take Delhi Public School directly. Okay. Free tickets or passes to transport employees. Airline and railway. So if Air India is giving free air ticket to Air India employee, Indigo is giving free air ticket to Indigo employee, Indian Railways is giving free air ticket to railway employee, then fully exempt. No need to add the travelling amount in taxable perks. But for all the others, it is fully taxable. Then food expense. Food expense வந்து alcohol fully taxable. Alcohol fully taxable. Other than alcohol, if it is remote area means what? Maybe a very distant area where there are no hotels, no restaurants, or maybe the facilities are very, very less. In such case, fully exempt. But not a remote area na. Listen, tea, coffee, bhaji, bonda, refreshments, everything fully exempt. No need to add it to taxable perquisites. But other than that, if the employer is providing a full meal to the employee, then it should be directly given in office or it should be through paid voucher, and that too value should be up to rupees 50 க்கு மேல இருந்தா fully taxable. So here also there is a confusion. Second case 50 க்கு மேல food expense போச்சுனா fully taxable, 50 rupees per meal. Next, club or recreation. It can be health club also, sports club also, gymkhana club also, any club. If the club membership is extended to all the employees of the organization, exempt. All the employees exempt. In other cases, you have to see whether it's a corporate membership or not a corporate membership. Corporate membership na initial expense is not perks, balance expense is equal to perks. Okay. For example, my employer is there. For certain type of employees alone, we have a facility to go to gymkhana club for free. We can go to gymkhana club for free. So my employer has taken a corporate membership in gymkhana club. Corporate membership means what? Corporate membership means ஒரு single subscription fee இருக்கும். அதுல எவ்வளவு வேணா employees வந்து நீங்க கொண்டு வந்துக்கலாம். It will not be for each and every employee. Split up will not be there. For me, how much they are paying. For other employees, how much they are paying. That split up is not there. That is corporate membership. That is why initial expense is there. No, that is not perks, because it cannot be found out how much is the perks, because that initial expense is for many employees together. We don't have the split up of the value. But balance expense, for example, I am going to Gymkhana club. There maybe swimming pool is not included in the membership, but I am using the swimming pool. So now they are charging my employer 500 rupees extra for me. This 500 rupees will be taxable perks. Okay. In other cases where there is no contribution, you can find out the split up na, then entire amount is taxable. Entire amount is taxable. In the club or expense, if it is for fully official purpose, it is fully exempt. Fully official purpose na fully exempt. How to know fully official purpose? Number 1, should be for official purposes. Number 2, complete details should be maintained by the employer. How much amount he is spending on what employee, when, all the details should be maintained. An employer should give a certificate that it was used for official purposes. If these 3 conditions are satisfied, fully official purpose kaga club ku poringana, then the club membership is fully exempt. No need to pay the tax. Okay. Now let's come to taxable perquisites. First is rent free accommodation. Very important. I want you to be attentive while listening to this. That is why take a 5 minutes break. 3:40 we will start sharp. Building விட்டு வெளியே போகாதீங்க. If possible மூஞ்சி கழுவிட்டு வந்துருங்க. Ready? Ready? Check. Listen. Rent-free accommodation. Rent-free accommodation. Rent-free accommodation. Now we are going to learn. Is it exempt? Answer is no. Rent-free accommodation is not exempt. It is very much taxable perquisite. Entire value is taxable. But how to calculate the value of the perquisite only we are going to know. Number one, if rent-free accommodation is given by government to the government employee. Rent-free accommodation means what? Any accommodation which is given to stay for the employee. Fine. So if it is given to a government employee, then the value will be the license fee prescribed by the government. License fee prescribed by the government minus rent paid by the employee. I already told you, no, if any amount is recovered from the employee, you have to reduce it. Balance amount only will be taxable perks. Any other employee, and also sometimes government employee also will not be staying in a accommodation where there is license fee prescribed. In such case, for those government employees also you have to look at other employee category. Purida, license fee prescribed illana enna pandrathu, government employee other employee treat pannittu you solve the answer. Other employee, in other employee case, the property can be employer's own property or it can be any other property. If it is employer's, if it is any other property, let us see first. The perks is 10% of the salary 4. 10% of salary 4. So here we are going to learn another salary definition, salary 4. What is salary 4? ABB CDM minus AAPP. Okay, ABB. So A for allowances, all taxable allowances. Taxable allowances, basic salary, bonus, commission, DA in terms. Listen, dearness allowance is also a taxable allowance. So taxable allowance la adu vandirukano. But yen separate ah kuduthirken because DA in terms only you have to take. DA not in terms you should not take for the calculation. Then any other monetary payment, and minus means you should not minus, you should not reduce. It means don't include. Minus means don't include. Minus means don't include. Don't include advance, don't include. Just a second. பரவாயில்லக்கா பிரேக் முடிஞ்சிருச்சு நான் அப்புறம் குடிச்சுக்கிறேன். சரி ஓகே சரிங்க ஒன்றும் பிரச்சனை இல்லை. Listen. So don't include advance, don't include arrears, don't include all this retirement benefits like provident fund etc. Don't include perquisites. Okay. So what to include? Taxable allowances, basic salary, bonus, commission, DA in terms, monetary payments. They should be included. What should not be included? Advance, arrear, all the retirement benefits, gratuity, PF etc. and perquisites should not be included. So ABB CDM minus AAPP. So in salary, what you should include? Taxable allowance, include taxable allowance, include basic salary, include bonus, commission, DA in terms, monetary payment. payment. Don't include advance, arrear, retirement benefit and perquisites. So taxable allowance, basic, bonus, commission, DA terms. This is difficult to remember, but yeah, you have to by heart. Taxable allowance, basic, bonus, commission, DA terms, monetary payment, and don't include advance, arrear, retirement benefit, perquisites. So this is the salary. 10% of this salary you have to take, or rent paid by the employer, whichever is lower. Listen, when employee is staying in the employer's accommodation, employer is paying the rent, logically the entire rent should be the perquisite. Entire rent should be the perquisite, because that is an amount which is paid by the employer, correct? But why are we doing this calculation? Why are we doing whichever is lower calculation? Listen, let's say the employee is staying in a house which is provided by the employer. Employer is paying rent. Let us assume that this employee is a very low paid employee with the salary of rupees 20,000 per month. But this employee lives in an area which is a very posh area, posh locality. So the rent which is paid by the employer for this employee is rupees 1 lakh per month. The salary is 20,000 per month. Rent paid by employer is 1 lakh per month. So if you see logically, this entire 1 lakh should be added to perks, because it is a benefit which is given by the employer to the employee. Employee kaga thane employer vanda and 1 lakh pay pandare. So if that is done, either his salary will be 2,40,000. In this case, after adding it, how much will it become? It will become 12 lakhs plus 2 lakh, 14,40,000. Total salary will become 14,40,000. Correct? The entire salary will just go in paying the tax of this 14,40,000. And the mari kuda nadakala. So to avoid these type of situations, there is a upper limit. In upper limit, 10% of the salary. So 10% of the salary, adukku mele perks irukka kudadu. Maximum perks should be how much? 10% of the salary. This salary, how to calculate? Include taxable allowance, basic pay, bonus, commission, DA terms, monetary payments. Don't include advance, arrear, retirement benefits, perquisites. Okay. Minus rent by employee. So that you should definitely reduce. Next, employer's property. What if it is employer property? So employer himself is having the property. So he is not making any payment to anyone because he owns the property. In such case, how to find the taxable perks? The taxable perks can be 5%, 7.5% or 10% of the salary depending on the area. What is the area? Please change it in your book. Okay. You should see the 2011 census. 2011 census. As per 2011 census, if the population is up to 15 lakhs, then take 5% of salary as perks. If population is more than 15 lakhs up to 40 lakhs, take 7.5% of salary as perks. If population is more than 40 lakhs, then take 10% of the salary as perquisites. 10% of the salary as perquisites. Okay. Next, sometimes even furniture might have been provided. It can be employer's own furniture or other person's furniture. If it is employer's own furniture, then the perquisite is how much? 10% of cost of furniture. Now listen, this furniture is a movable asset. Now multiple cases you will see wherever employer is providing a movable asset to the employee, the perquisite value is 10% of the movable asset. Okay. Only in few cases it is different, that we will discuss. But majorly it is what? 10%. If employer is providing furniture also 10%, sofa also 10%, AC also 10%, So whatever it is 10 percentage. Okay. If employer has hired the furniture and then providing, then the perquisite value is the higher charges paid by the employer. Whatever rent the employer is paying, that much will be added to the salary as perquisites. Now some small points. If there is a transfer of the employee and two accommodations are given to the employee. For example, I was working in Chennai. So now I got transferred to Coimbatore. In Coimbatore also they have given me a house. In Chennai also they have given me a house because my wife and children are living in Chennai. That is why I am having two houses. If I am having two houses, till up to 90 days I can take the lower value of both the houses as perquisite. After 90 days, both the houses should be added to the perquisites. Then salary. For what period you will take the salary? Similar to house rent allowance. The period for which the employee is occupying the accommodation. Okay. So if employee has occupied the accommodation for 6 months, take 6 months salary. If it is for 8 months, take 8 months salary. For full year na full year salary. Next. From previous year 24-25 onwards, that is from your previous year onwards, perquisite shall be restricted to maximum perquisite for non-government accommodation. Perquisite shall be restricted to perquisite in 23-24 divided by cost inflation index of 23-24 multiplied by cost inflation index of 24-25. So என்ன சொல்றாங்க, now cost inflation first இதுல இருந்துச்சு capital gain ல, now it has come to salary head of income also, where in rent free accommodation they are telling maximum perks, the final cap should be how much? It should be last year perks into cost adjusted, cost inflated amount of the next year. So take the perks of the previous year 23-24 and then inflate it to 24-25. You will get the index value, indexed amount. This indexed amount is only the maximum value of perks for 23-24. For example, if let's say in previous year 23-24 the value was say 7 lakhs, and let us imagine that the cost inflation index of previous year 23-24 is 348 and 24-25 is 363. So you should do like this, 7 lakh divided by 348 multiplied by 363. எவ்வளவு வருது? 7,30,000. 170, 172. So the perks in 24-25 should not be more than 730,172. If it is up to 173,172 na, that is the final answer. If it is more than 730,172 na, then you should restrict it to 730,172. Sir, will the index be given in question? Answer is yes. Sir, question la kudukkalana enna pandrathu? Ignore pandirunga. Next, rent free accommodation is fully exempt for High Court and Supreme Court judge, member of parliament, union minister, leader of opposition. So for all these politicians and High Court and Supreme Court judge, the rent free accommodation is fully exempt. Next one, avlo important illa, விட்டுருங்க பரவாயில்ல, ஒரு glance அடிச்சுக்கலாம். Then MCQ ல suppose வந்துச்சுனா எனக்கு திட்டுவீங்க, சார் நீங்க வந்து இக்னோர் பண்ண சொன்னீங்க ஆனா அதே क्वेश्चनல வந்துச்சு. Hotel benefit. If hotel benefit is provided by the employer to the employee, then how to calculate the value of perks? Taxable perks is equal to 24% of salary or rent or charges paid by the employer, whichever is lower, minus amount recovered from the employee. Okay, so I have joined an organization in Bangalore. I went to Bangalore. Before I can search a house, I need to stay there for 10 to 15 days to search for a house, correct? So for 10 to 15 days they have given me a hotel. In hotel I am staying there for 15 days. Now for that 15 days, whatever is my salary and the 15 days order salary order 24%. Okay, or actual charges paid by my employer, whichever is lower, minus if I am paying for that hotel na, then whatever value I am paying, that has to be reduced. If transfer of an employee, so one place to another place, if the employee has transferred, then up to 15 days no perks. More than 15 days only perks will start from the 16th day onwards. Next, that is why generally the employer organization, no, they will have a rule, maximum 15 days we will provide you hotel. More than 15 days, no employer will provide hotel because of this condition. Now let's come to motor car. Motor car facility given to the employee. It can be for official purpose, it can be for personal purpose, it can be for POPP, partly official, partly personal purpose. First let us see official purpose. Official purpose, if the car is given to employee, then it is fully exempt. Employee need not pay any tax on the car as a perquisite. But for this fully exempt, you have to satisfy the condition. Condition number 1, car should only be used for official purpose. Number 2, all the expense should be maintained by the employer. Expense related to car should be maintained by the employer. Condition number 3, employer should give a certificate that it is used only for official purpose. Same as club. Club lande inge edutukonga. Now let us see personal purpose. Personal purpose irundha, if it is employer's car, movable asset given to employee, correct? 10% of the cost. Wherever movable asset is given by the employer to the employee, take 10% of the cost. Next, hired car na higher charges paid by the employer. Plus driver's salary, if it is paid by the employer, then driver's salary also. Running and maintenance expense, if it is incurred by the employer, take that running and maintenance expense also. Add everything to the salary. Now let us see partly official, partly personal purpose. In case of partly official, partly personal also, there can be two cases. It is employee's car, it is employer's car. If it is employee's car and maintenance and running is also paid by employee, then there is no perks because employee is only salvifying, correct? So no tax. Then if it is employee's car and running and maintenance expense is paid by the employer, then what is the perks? Charges, total charges which is paid by employer minus 1800 rupees per month or 2400 rupees per month. 1800 if the car is up to 1600 cc or 1.6 liter engine, and 2400 rupees per month if the car is more than 1600 cc or more than 1.6 liter engine. Okay, this 1600 cc is also called 1.6 liter. Some questions la 1600 nu kodupanga, sila questions la 1.6 liter nu kodupanga. So you reduce it, balance amount will be taxable perks. Now listen, in this case also, if you know exactly how much is used for official na, then that much amount can be reduced. Balance amount will be per personal purpose, it can be added to perks. But if it is not known, then use this 800, 1800 and 2400 formula. Next, if it is employer's car, running and maintenance expense paid by employee, it means what? Car mattum employer kuduthirukanga, balance ella selavu, petrol selavu, repair selavu, insurance selavu, everything is being taken care of by the employee. In such case, the perks value will be 600 rupees per month up to 1600 cc, 900 rupees per month greater than 1600 cc. Next, last case, employer's car, running and maintenance also given by employer. In such case, maximum, what is that? 1800 rupees per month in case up to 1600 cc, and 2400 rupees per month greater than 1600 cc will be the value of perks. That much amount you should add to salary. Okay. Now, what if driver is also given by employer? In such case, add 900 per month for providing the driver. 900 per month should be added to the perks. See here, exemption la edume kediyadhu. How to find out the value of taxable perks we are finding out. Don't get confused. Okay. If there is more than one POPP, treat one car as POPP and remaining car should be treated as personal. Remaining car personal. Now next one, loan given at a concessional rate. This only I was speaking in the starting, correct? Advance salary or advance against salary. Advance against salary is a loan, and if the loan is given at a concessional rate, then you have to add the excess interest as taxable perks. How to find out the taxable perk? taxable perks is equal to loan multiplied by SBI interest rate on the first day of the previous year minus actual interest rate. SBI interest rate on the first day of the previous year minus actual interest rate. So reduce the interest rate, you will get perks interest rate of perks. That amount you have to add. This calculation has to be done at the end of every month. At the end of every month you have to calculate perks and then add up all the perks value, you will get the total perks. Next, interest perks is not taxable if loan up to 20,000. Listen, interest up to 20,000 illa. Loan itself is up to 20,000. Total loan is up to 20,000 na, no need to tax any interest as perks. Next, if loan is given for treatment of specified diseases, then no need to tax any perks. Next, gift, voucher, token, etc. If a cash gift is given to the employee, fully taxable. If a cash gift, so if cash gift is allowed as perks now, then people will start paying salary as gift. That is why if cash gift is given to employee, it is fully taxable perks. And what about in kind? If gift is given in kind, value of gift should be less than 5,000. Exact 5,000, less than 5,000, it is exempt. If it is exact 5,000 or more, it is fully taxable. Exact 5,000 or more, fully taxable. This is the third case which I was telling. So if it is more than 5,000, no 5,000 exemption and excess amount taxable. Adala kadiyadu. 5,000 ku mela pona entire amount taxable. Fine. Next, travel, tour, accommodation, etc. If travel, tour, accommodation, one is LTC. LTC irunda, then see that particular section 10.5. If it is not LTC, you find out the value of perks over here. How to find out value of perks? If travel, tour or accommodation is given for official purpose, for the employee it is exempt. For the family member, the amount incurred by the employer is taxable perks. Okay. So employee mele spend panna exempt because it is official. Employee or a family member mele spend panna, the amount will be taxable. Just a second. Okay. Not official purpose. If it is not for official purpose, then if it is offered to all the employees, amount incurred by the employer is taxable perks. If it is offered only to particular employees, then value offered by other agencies to the public is taxable perks. This also sounds like illogical, but this is the provision. If employee is offering the travel to all the employees and it is not official, then whatever amount the employer is spending for the employee is taxable as perquisite. If the leave or travel is only given for non-official purpose, only to a selected number of employees, then don't see what is the amount spent by the employer. See what is the rate of that particular tour or travel in the market by other agencies. That will be the taxable perquisite. If an official tour is extended as vacation, then the amount spent for vacation will be taxable perks. Now specified security or sweat equity. This provision is there. Now this I feel that it is still not fully utilized by the examiners. Question, I am expecting some question to come, but question does not come generally in the examination. Specified security or sweat equity. Specified security means what? Sweat equity shares or ESOPs, employee stock option plan. It means what? Shares that are offered at a concessional price, but they can't be used right now. You have to wait till a vesting period. After that period is over, after that you can start using those shares. Using the shares, you can sell the shares to whatever you want with them. Okay. So shares offered at a concessional rate. What is the taxable perks? Taxable perks is equal to fair market value on the date of exercise minus issue price. Fair market value minus issue price. So very simple. What is the market rate minus at what rate the employer is providing to the employee? The difference will be what? Taxable perquisites. This amount is taxable in the hands of the employee in the year in which they are receiving the shares itself. Okay. Now, how to find out this fair market value? If the shares are listed in a recognized stock exchange, then see the average of opening value and closing balance, on the date of exercise in the highest volume stock exchange. In the highest volume stock exchange. Now listen here, listen carefully. ESOP, quick solra. Let's say employer is ABC Limited, giving to employee Mr. Z. They have given on 1/4/2020 and they told it can be exercised on 30th June 2024. 30th June 2024 varakum, if the employee is staying in the organization, then they can exercise it and they will get the shares. Okay. Now it is 30th June 2024 and they have exercised it. 30th June 2024 exercised. In the year of exercise, this will be taxable as perks. So in previous year 24-25, this will be taxable as perquisites. Now how to find the value? On this 30th June 2024, you have to see whether ABC Limited is listed or not. If it is listed, you have to see in which stock exchange there is the highest volume, whether in NSE or whether in BSE. NSE la highest volume ayindicha, BSE la highest volume. National Stock Exchange, Bombay Stock Exchange. Where is the highest volume? Let's say highest volume was there in BSE, Bombay Stock Exchange. So here you should take on the date of exercise opening value plus closing value divide by 2. So average of opening and closing balance on the date of exercise in the highest volume stock exchange. Now listen, highest volume illa, volume kadadu. No trading happened on the exercise date. Then what to do? Take the previous date on which trading happened. And there you just take, listen, if shares were not traded on the date of exercise, fair market value is closing price on the date on which trading previously took place in the highest volume stock exchange. Trading nadakalana enna pandrathu? Just take the closing value when it was traded last. Closing price eduthukonga when it was traded last. Now let's say it is not recognized in stock exchange, it is not listed. Then what to do? You have to take the value which is given by merchant banker. Merchant banker means what? Is a professional to whom you can go and you can ask them to value the company. They will give you a valuation report and the exact value of shares. Okay. Now listen, it is every day a person cannot go to a merchant banker to take a value because he will charge his fees. Correct? That is why even within 180 days before, if you are having a value by merchant banker, you can take that value also. So on exercise date or on earlier date within 180 days. In question, if both buying price and selling price is given, take the selling price. Now, tax on perquisite value of specified securities is required to be paid in the year of exercising of option. However, where such securities are allotted by the current employer being an eligible startup, the perquisite is taxable in a later year. Now listen, if the employer who is giving ESOPs is a startup, eligible startup means what? Recognized by DPIIT. In such case, when the employee is receiving the perquisites, such employee need not pay any tax in the year of exercising. They can postpone their taxability to a later year. How much they can postpone? Number 1, after the expiry of 48 months from the end of relevant assessment year. Now listen, end of relevant assessment year in your case is what? 31/3/2026. Assessment year 25-26. So 48 months means what? 4 years. So it can be extended to 31/3/2030. Next, the year in which sale of such security or share is made by the assessee. See, I have exercised it, so now I am having the shares. Now I can sell those shares. No, let's say next year itself I sold the shares. I didn't wait for 4 years and all. Next year I sold the shares. So while you sell the shares, you also have to pay the tax on perquisites when it was exercised. Okay. Then third one, in which the assessee ceases to be the employee of the employer. So I am leaving the organization, I am leaving the startup, and now I am joining another employer. In such case, in the year in which I leave the startup, that year I have to pay the tax on perquisites. So what did I tell you? If a startup is receiving employee stock option plan, then you have to calculate normally like how I told before. But the taxation alone you can postpone to a later year. Generally you can postpone for 4 years. Up to 2030 I can postpone. But if before 2030 itself, either I sell those shares or I leave my employer, then I have to pay the tax before itself. Okay. And moreover, listen. Now here, this I am going to link with capital gain in future. When I am going to take capital gain tomorrow, day after tomorrow, I am going to link it. Let's say you have received shares from ABC Limited. This Mr. Z has received shares from ABC Limited for rupees 90 per share. 90 per share he has paid. Okay. But the fair market value of the shares was rupees 500. Okay. Now 500 minus 90, that is how much? 410 per share is what? Perks. This perks will be taxable under salary head of income, correct? Now since I have already paid the tax on 410, hence my cost as per income tax will become 500. So in future when I am selling these shares, I can take the cost as 500. Okay? Because I have already paid the tax till 500. Now next, use of movable assets. If any movable asset is given to the employee, then if it is a computer laptop, it is assumed that computer laptop is used for official purpose, fully exempt. If it is other than computer laptop, if it is owned by the employer, 10% of cost. If it is hired by the employer, higher charges paid by the employer. So movable assets ki rule is the same throughout. Now let's come to transfer of movable asset. Transfer of movable asset. So movable asset, first let's say the employer had given to use, now he is telling to the employee, you keep it with yourself. Now you can own this asset. In such case, taxable perquisite is equal to WDV minus if any consideration is received from the employee. So WDV is the taxable perks. Now how to calculate WDV? Is it like PGBP? Answer is no. Separate WDV calculation. How to calculate? For computer laptop, 50% WDV method, for car 20% WDV method, for other assets 10% SLM method. Computer laptop 50% WDV, car 20% WDV, other assets 10% straight line method, only for completed years. Only for completed years from the date of purchase. From the date of purchase. From the date of purchase. Now I'll give you an example. Let's say there was a car. Car given by employer to employee. This car was purchased on 15/9/2022. Car is given on 1/9/2024. That is during previous year 24-25. This car was purchased by the employer for 10 lakhs. How to calculate the value of perks? You have to reduce the depreciation, correct? How to reduce the depreciation? Now from 15/9 to 15/9/2023, what is the value of the car? 10 lakhs minus 20%, 8 lakhs. 8 lakhs becomes the value of car. Now 15/9/2024 only the value will reduce. Before 15/9/2024 itself it is sold. or given to the employee, correct? Hence the value of car should be taken as 8 lakhs. Here only students make silly mistake. Completed year na enna theriyadhu. Okay, evlo percentage edukonu theriyadhu. WDV pannuma SLM pannuma theriyadhu. So be very very clear. In case of computer laptop, 50% WDV, car 20% WDV, and any other asset 10% SLM, straight line method, and that too depreciation only for the completed years. So in this case, the value should be taken as what? 8 lakhs. Value should be taken as 8 lakhs. Now other taxable perquisites. So amount incurred by the employer will be the taxable. Generally, see, we have not covered anything here. If there is anything else, then how to find out the taxable perquisites? If any amount is incurred by the employer for the employee, then that is taxable perquisites. Okay. Example: gas, electricity, water supply paid by the employer. If it is paid by the employer, now whatever amount is paid by the employer, you add it to the salary. Free domestic help provided by the employer. If free domestic help is provided, then whatever salary is paid by employer to free domestic help, that should be added to taxable perquisite. Next, credit card expenses paid by the employer. If it is for official purpose, no need to add to taxable perquisite. If it is not for official purpose, add it to taxable perquisites. Payment of any obligation by the employer. If employee has to pay any obligation, but instead of him paying, the employer is paying on his behalf, then this is also taxable perquisite. Now you have to understand the difference between providing a benefit and paying the obligation. Providing a benefit and paying the obligation. One question is there in your study material. That same example I will give you. Easily you will be able to understand. Now let's say free domestic help. Free domestic help. There are two cases. Employer has hired helper. Employee has hired and has to pay salary, but employer pays on his behalf. See, in first case also, employer is only giving salary to helper. Second case also, employer is only giving salary to helper, but there is fundamental difference. What is the difference? Here employer, in first case, employer is only hired the domestic helper and paying the salary. Second case la vande, employee has hired and instead of employee paying, the employer is paying. If employer does not pay, what will happen? Employee has to pay, no? Hence, this is an obligation of the employee met by the employer. Employee had an obligation, that obligation has been met by the employer. Okay. So that is the difference between providing and obligation. Providing the facility and meeting the obligation. Why we are learning this, I am going to tell you now. See, Kana, first we have to know, now next concept, specified employees. Specified employees. Who are specified employees? Big employees. Big employees are specified employees who are earning huge, like directors, like employees who are having 20% or more voting power in an organization, like employees who are earning more than 50,000 rupees. More than 50,000 rupees per annum. Per annum are whom? Specified employees. Okay. So salary excluding non-monetary perks minus section 16 standard deduction. So after reducing the standard deduction, if the listen, after reducing the standard deduction, if the salary is coming below 50,000, then such employee is a non-specified employee. If it is above 50,000, then such employee is a specified employee. Specified employee means big employee. For specified employees, certain benefits are not given. For non-specified employees, that means small employees, certain benefits are given. What are those benefits? Number 1, education facility fully exempt. Education facility fully exempt. Generally to employee it is exempt. For children of employee it is subject to conditions, correct? For if it is non-specified employee na fully exempt. For children வந்து எவ்வளவு வேணா அவங்க how much ever is the cost of the education, fully exempt. Next, transport facility giving free tickets is fully exempt for non-specified employees. Next, giving a free domestic help like a sweeper, gardener, watchman, personal attendant, etc. is fully exempt. But the free domestic help or a salary itself will be more than the non-specified employee salary. So practically nowadays this provision is not relevant, but still it is there in your syllabus, there in the Income Tax Act. That is why we are learning. So this is why we learned the difference. Let's see here. If this is a non-specified employee, in such case what will happen? If employer has hired a helper now, this is exempt. If it is the obligation of the employee met by the employer now, then it is taxable. Purida? If employer has hired a domestic help, the domestic help is exempt. If employer is only meeting the obligation of the employee, then it is taxable for this non-specified employee. Next, gas, electricity, water supply. Gas, electricity, water supply paid by employer is fully exempt. Motor car and the calculation la பண்ணவே வேண்டாம். If it is non-specified employee na fully exempt. Okay. Now coming to, first we'll discuss concept of pay scale. Relief we'll discuss later on. What is pay scale? Listen here. If you find some wordings like this in your question, you should not panic. For example, Rekha joined Best Academy on 1/7/2016 on a pay scale of 10,000, 1,000, 13,000, 1,500, 16,000, 2,000, 20,000. This is called pay scale. Pay scale means what? Pay scale means your monthly salary is going to be 10,000. Then every year we will increase by 1,000 rupees till it reaches 13,000. After that, every year we will increase by 1,500 rupees till it reaches 16,000. Then every year we will increase by 2,000 rupees till it reaches 20,000. Okay. So here you can see the example. So from 1/7/2016 to 30 June 2017, the salary was 10,000 per month. Then it was increased to 11,000, 12,000, 13,000. Thereafter it was increased by 1,500, 14,500, 16,000. Then it was increased by 2,000, 18,000, 20,000. So this is only concept of pay scale. So if pay scale is given in question, you have to interpret it or read it like this. Okay. Now let us solve some questions. This 80 CCH Agniveer Corpus Fund, this we will discuss later on along with deductions. Other than this, relief is there, but apart from that, salary, the theoretical part entirely it is complete. As much as possible, I have tried to condense the salary chapter so that it is easier for you to memorize, learn and attempt the questions in the examination. Now let us solve the question number illustration 23. Illustration 23. Please solve. Please solve yourself, then we will discuss the answer. Just quickly calculate. You can look at the notes, whatever provision is given, quickly calculate. We'll discuss the answer. We'll try to finish as many questions as possible in next 15-20 minutes. Let us try to cover as many questions as we can. Tomorrow the class will start at 8. Today morning some difficulty was there, that is why I had to postpone by 9 o'clock. Here some technical problem was there. We'll start by 8 tomorrow. I think tomorrow some session is there at 4 o'clock, so I have to sharply wind up by 3. I think. Then last 2 days maybe I'll take some extra. Tomorrow full and full PGBP. Done? Be quick. குட்டி கொஸ்டின், எவ்வளோ டாக்ஸபிள் அமௌண்ட், டாக்ஸபிள் பர்க்ஸ் எவ்வளோன்னு டக்கு டக்குன்னு கால்குலேட் பண்ணி முடிங்க. Shall we start? X Limited provided the following perquisite to its employee Mr. Y for previous year 24-25. Accommodation taken on lease by X Limited for 15,000 per month. 5,000 per month is recovered from the salary of Mr. Y. Furniture for which the higher charges is paid by X Limited is 3,000 per month. No amount is recovered. Car of 1200cc which is owned by X Limited and given to Mr. Y to be used both for official and personal purpose. All the running and maintenance expenses are fully met by the employer. He is also provided with a chauffeur. The gift voucher of 10,000 rupees on his birthday. Compute the value of perks. Assuming his salary for perks valuation is 10 lakhs. So here shortcut. You need not even compute the salary. Directly it is given as 12 lakhs. So first case la vandu, what is the total value? 15,000 minus 5,000 multiplied by 12. So how much? 1,20,000 or 10% of salary. 10% of 10 lakhs, which is how much? 1 lakh. Whichever is lower, so the value will be 1 lakh. Next, furniture for which the higher charges is 3,000 per month. So higher charges paid by employer. 3,000 multiplied by 12 is equal to 36,000. That car of 1200cc. 1200cc is what? Less than 1600cc. It is provided for the entire year because nothing is mentioned in between the year. Owned by employer. Running maintenance also paid by employer. So 800 rupees per month. So 1800 multiplied by 12 is how much? 21,600. Then gift voucher of 10,000. I told you if it is more than 5,000 na or chauffeur kuda irukka. Okay. So chauffeur ku vande evlo 900 into 12 is equal to 10,800. Then 10,000 rupees gift voucher. So 10,000 fully taxable since it is 5,000 or more. 5,000 or more. So correct? 1 lakh rupee. Correct? என்னது 40,000 எடுத்து. Oh, okay. So listen, one mistake, silly mistake which is done by us. What did we do? 15,000 minus 5,000 we did. We should not do 15,000 minus 5,000. After computing the value of perks only, we have to reduce the rent paid by rent paid by employee. So listen, here what mistake we did? 15,000 minus 5,000 we did. So we have to reduce this 15,000 only after finding the answer. Listen, 15,000 multiplied by 12 is equal to 1,80,000. 10 percentage of 10 lakhs is equal to 1 lakh. Lower amount is 1 lakh. From this 1 lakh only we have to reduce rent by employee, which is how much? 5,000 multiplied by 12, so is equal to 60,000. So the value of taxable perks is only 40,000. 40,000. Silly mistake. So adu panniyachu. Then higher charges 36,000 correct. Then perquisite value of Santro car 32,400 is correct. 10,000 value of gift voucher is correct. Here alternate view can be taken that sum in excess of 5,000 is taxable, hence 5,000 is only taxable. But we are going to take a view in all the cases where excess amount are in the entire amount is taxable. Okay, this is done. Now let us see illustration 21. Illustration 21. Be quick. Just find out the value quickly. Salary chapter la theory la edume kediyadu. Solve the question, that's it. Hardly any provisions you are required to write. If you are ignoring something, then only you should write that I have ignored this point because so and so provision. Solve. Last one to the calculation. Diploma Done. Let's discuss. Shri Bala, employed in ABC company as a finance manager, gives you the list of perks received by the company to him for the entire financial year 24-25. Domestic servant was provided at the residence of Bala. Salary of domestic servant is 1500 per month. Servant was engaged by him and salary is reimbursed by the company. In case the company has employed the domestic servant, what is the value of perquisite? See, this person, Mr. Bala, is a not a non is a specified employee, correct? But அது எப்படி தெரியும்? கொடுத்திருக்காங்களா salary எவ்வளவுன்னு? Salary கொடுத்திருக்காங்களா? இல்ல. So you can write if the person is specified employee. Listen. So first one is obligation met by employer. That is why 1500 multiplied by 12 is equal to how much? 18,000 will be taxable perquisites. In second case, 18,000 is taxable perquisites only for specified employees, not taxable perquisite for non-specified employees. Then free education was provided to two children, Aarti and Ashok, in a school maintained and owned by the company. Cost of such education for Aarti is computed at 900 per month, Ashok is computed at 1200 per month. No amount was recovered by the employee. What did I tell you? 1000 varaikku irundha exempt, 1000 ku mela irundha fully taxable. So 1200 multiplied by 12 is equal to 14,400. Employer has provided movable assets such as TV, refrigerator, AC at the residence of Bala. The actual cost of such asset provided to the employee is 1,10,000. So movable asset when the 1,10,000 multiplied by 10% is equal to how much? 11,000. 11,000. Gift voucher of 10,000 was given on the occasion of his marriage anniversary. It is given by the company to all the employees above a certain grade. Does not matter. 10,000 fully taxable perquisite. Listen. What if the employer, instead of giving on marriage anniversary, he is giving 10,000 on marriage? Exempt or taxable? Taxable, because 56(2)(10) applies only in case of the amount which is given without consideration or for inadequate consideration, which is not covered under salary and PGBP. Salary and PGBP means you should see those both chapters. Only for other than employer-employee relationship or business relationship, you should come to IFOS, that is 56(2)(10). Next, 25,000 phone bill. Phone bill paid by employer is fully exempt, no? So no need to have any taxable perquisites. Next, housing loan at 6% per annum. Amount outstanding on 1/4/2024 is 6 lakhs. Sri Bala pays 12,000 per month towards principal on 5th of each month. So end of every month paakano, correct? And how much is the perquisites? 6% minus 10%, so 4%. End of every month. So end of April, 4, 5, 6, 7, 8, 9, 10, 11, 12, 1, 2, 3. So 6 lakhs. 6 lakhs nande 12,000 pay பண்ணிட்டாங்கன்னா எவ்வளோ balance? 5,88,000. Then 576, 564, 552, 540, 528, 516, 504, 492, 4,80,000, 4,68,000, 4,56,000. Okay, so these are the 12 months multiplied by 4% multiplied by 1/12 multiplied by 4% multiplied by 1/12. 12. So எவ்வளவு வருது? $1960. Hmm? 1920, 1880. அப்படியே 40 ரூபா கம்மி ஆயிட்டே போகுமா? 1800. I'm assuming, I don't know. 1800 18 1760 1760 hmm 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 1 2 3 4 5 6 7 8 9 10 11 12 I put total how much 20860 so 20860 were there okay va let us see fine now let's come to the solution taxable perquisites first one taxable perquisites 18000 correct 18000 correct then second one la ipo enna kuduthirukanga if company had employed the domestic servant and the facility of such servant is given to employee, then perquisite is taxable only in the case of specified employee. In such case, also it would be 18,000. So specified employee, so 18,000. Educational institution, okay. So here when the perquisite value will be 14,400. Alternatively, it can also be taken that excess value, but nanga alternatively pola, we are going like this only. Next, where the employer has provided movable assets. So in the case of 11,000, correct. Value of any gift. So total 10,000 is liable to taxable perquisites. Alternatively 5,000 kuda irukkalam. Next, telephone bill paid by employer even though it is in the residence of the employee is tax free. It's tax free perquisites. Value of benefit to the assessee. Now ipo ennadhu 20,818 னு வருது. நம்ம எவ்வளவு கண்டுபிடிச்சோம் 20,860. 20 rupees difference. Some addition mistake here everything is looking correct only, some calculation mistake. Yes, all the figures are correct, so calculator la I think mistake aayirukku. Okay, 20,880, that's it. Now let's go to the next question, illustration number 20. Quickly idu mudichidalam. Illustration number 20. இந்த போர்டுல பார்த்தா கொஞ்சம் சின்னதா தெரியும். Is it visible? Somewhat. If not, you can use the material with you. Be quick. If a dedicated question comes in the examination, it will be like this for salary check. Gratuity also there, leave encashment also there, pension also there. Done. Shall we discuss? Listen. Mr. X retired from the services of Messrs. Y Limited on 31/1/2025. After completing service of 30 years and 1 month, he had joined the company on 1/1/1995 at the age of 30 years and received the following on his retirement. Okay. So how many years of service completed? 30 years of 1/1/1995 to 1/1/2025. 96 2025 30 years acha. 30 years 31 years 30 years 1 month. Okay. Next, gratuity is 6 lakhs. He was covered under Payment of Gratuity Act. Leave encashment 3,30,000 for 330 days leave balance in his account. See, leave balance in his account means what? Ivlo leave வந்து எடுக்காம விட்டிருக்காரு. So that is directly you have seen earned leave minus actual leave. You need not do any calculation. So leave credited was 30 days leave. Only if this was not 30 days, maybe it was 40 days or 45 days, you should have done reverse calculation to know what is the earned leave, what is the actual leave, and then you have to do calculation. But since it is 30 days, directly you can take 330 days as leave equivalent. As per scheme of company, he was offered a car which was purchased on 31/2022 by the company for 5 lakhs. The company has recovered 2 lakhs from him for the car. The company depreciates the vehicle at the rate of 15% on straight line method. The depreciation namalku relevant or not relevant. Amount of 3 lakh rupees as commuted pension for 2/3 of his pension commutation. Company presented him a gift voucher worth 6,000 on his retirement. His colleagues also gifted him a TV worth rupees 50,000 from their own contribution. Following are the other particulars. Basic salary of 20,000 and 50% DA per month for the period of 1/4/2024 to 31/1/2025. Pension of 5,000 per month from 1/2/2025 to 31/3/2025 after commutation of pension. Compute his gross total income from the above assessment year, for the assessment year 25-26. Okay. So one by one pola, no problem. Gratuity. So total gratuity is how much? 6 lakhs minus exempt under section 1010, which is first 15 payment covered in PGA, no, 15/26 into salary 2, which is basic plus DA. Basic plus DA term, DA terms illa DA into number of years of service rounded, correct? Number of years of service rounded. So here 15 divided by 26 multiplied by basic evlo 20,000, DA is 50%, so 10,000, so multiplied by 30,000. Eyo enna agudhu? Hey. What is happening? Joe. Multiplied by 30,000 into number of years is 30 is equal to then second one on the actual is 6 lakhs and third one on the limit is 20 lakhs. So this is the answer, correct? So minus 519,231. What is the balance? Okay. Next, leave encashment of 3,30,000. So leave encashment 3,30,000 minus exemption. இதில் வந்து lower of number 1 என்னது கிளம்ப வேண்டாமா? Ten month multiplied by average salary. Ten month into 10-month average salary. So 10-month average salary is 20,000 plus 10,000 divided by 10. Correct? The 10 cancel 3 lakhs. Then second one and the leave equivalent divided by 30 into average salary. 3 இது தப்பா இருக்குனா 30,000 330 divided by 30 into 30,000. So 3,30,000. Correct? 3,30,000. Third one actual, which is also 3,30,000. And number 4, what is the limit? 25 lakhs. Okay, 25 lakhs. So we will take 3 lakhs. So minus exemption 3 lakhs. So outside we will write 30,000. Next, as per the scheme of the company, he was offered a car which was purchased on 31/2022 by the company for 5 lakh rupees. So 31/2022, 31/2023, 31/2024. Okay, so 2 years depreciation you have to provide. WDV of car is equal to 5 lakhs minus depreciation till 31/23, which is how much? 5 lakh into 20%, 1 lakh. So balance is 4 lakhs minus depreciation till 31/24. மூணு வருஷத்துக்கு பண்ணுமா? 24 is how much? 80,000. So balance 3,20,000 minus depreciation till 31/25, which is 64,000. So balance is 2,56,000 minus amount recovered. Amount recovered வந்து எவ்வளோ? 2 lakhs. Reduce it. Balance amount 56,000 should be added to salary. 56,000 should be added to salary. WDV வந்து 2,56,000. Then reduce the amount received from the employee. 56 added to salary. Next, an amount of 3 lakh as commutation of pension for 2/3 of his pension commutation. So commuted pension வந்து how much he has received? 3 lakhs. So total commuted pension is equal to 3 lakhs. Minus exemption. Exemption ல வந்து என்ன பண்ணணும்? Since he is covered by payment of gratuity, received gratuity, so full pension into 1/2. What is full pension? Full pension கொடுத்திருக்கா? 2/3 of his pension. 2/3 means what? 2/3 is how much percentage? 66.67 percentage. So 3 lakhs divided by 66.67 percentage. So 4,50,000 into 1 by 3, sorry 1 by 3 pannu, correct? Which is 1,50,000. So balance will be how much? 1,50,000. Okay. Then next another company presented him gift voucher of 6,000 on his retirement. Entire amount is taxable. Gift voucher 6,000. Then next one, his colleagues also gifted him LCD TV worth rupees 50,000 from their own contribution. Is it taxable? Answer is no, because aggregate amount received is up to 50,000, not taxable under 56(2)(10). Since there is no employer-employee relationship between colleagues and the other employee, that is why it is not taxable under salary head of income. Next, basic salary. Okay, basic salary is 20,000 multiplied by how many months? 10 months. Basic 20,000 multiplied by 10 months, which is 2 lakhs. DA is 10,000 into 10 months, which is 1 lakh. And then pension is 5,000 into 2 months, which is 10,000. Correct? That's it. That's it. So now please add. Na solren appade calculator le tattaga. 80769 done. 30,000, 56,000, 1,50,000, 6,000, 2 lakhs, 1 lakh, 10,000. 769. 682,769 வருது. 732,769 வருது. 1 lakh என்ன மிஸ் ஆயிடுச்சு? லீவ் என்கேஷ்மெண்ட் இங்க 113 போட்டிருக்கு. நம்ம எப்படி 30 கண்டுபிடிச்சோம்? How much is it received? For leave encashment. So what they have done? எங்க change இருக்கு? Why they have taken 2 months? Okay, they have taken here 10 months into 20,000. We have taken 10 months into 30,000. It has been assumed that the dearness allowance does not form part of retirement benefits. We have assumed that it forms part of retirement benefits. Okay, so this is also correct, that is also correct, and then you have to reduce the standard deduction, you will get the final answer. Fine. So in the question la enna naanga miss பண்ணிட்டோம், dearness allowance assumption போட்டது miss பண்ணிட்டோம். Okay, did you understand the calculation? Comfortable with the calculation? Memorize தான் பண்ணணும். இன்னைக்கு ப்ளீஸ் வீட்டுக்கு போயிட்டு கொஞ்சம் எஃபர்ட் போட்டுட்டு மெமரைஸ் பண்ணிருங்க. Memorize the entire salary chapter as much as possible. I have tried to condense it for you. Last discussion today, we'll have a discussion about relief for arrears of salary. Relief under section 89 for arrears of salary. Arrears of salary. Now listen, what is this relief now? Listen to me. Let's say previous year 23-24, previous year 24-25. Let's say I have received a salary of 3 lakh rupees. Here I have received a salary of 7 lakh rupees. Salary of 3 lakhs, salary of 7 lakhs. 4 lakhs was the disputed salary of previous year 23-24, which I received in previous year 24-25. Listen, disputed salary of 4 lakhs I should have received in 23-24 itself, but I received in 24-25. So 4 lakhs I received in 24-25. Now this is only called the concept of arrears of salary. 23-24 arrears I have received in 24-25. Now because of this arrear, what is happening, let me tell you. Let us assume that this is 115 BAC. Okay. In this case, previous year 23-24, for the entire 3 lakhs, I am claiming exemption. Basic exemption limit is 3 lakhs in new scheme. That is why I pay 0 tax. Okay. In previous year 24-25, 7 lakh rupees is there, no? Hence, I claim rebate. I claim standard deduction. That is why in 24-25 also my tax should come to 0. But now what is happening? Instead of coming to 0, my tax is coming as 11 lakhs multiplied by slab rates. So just because I am receiving the previous year arrear now, I am paying an increased amount of taxation. Had it been received in that year itself, I would have paid a lower taxation. So what is the relief? Relief is that you have to first calculate how much tax you are paying because of this arrear. If arrear was not there, how much tax you would have paid? The difference is allowed as relief. Difference is allowed as relief. So in question, if you see, obviously it is a very big question in your study material. We don't have time to solve the entire question, but you will be able to get an idea. Now see here, Mr. Hari, who turned 72 years old, he is receiving arrears. So 2010-11 is there, 11-12 is there, and 12-13 is there. Arrears now received 1,03,000, 1,17,000, 1,25,000. Taxable salary in that year it has been given. Compute the relief under section 18(9). Now in previous year 24-25 he has received 10,25,000. Total arrears is 345. And the 345 ku split up தான் கொடுத்திருக்காங்க. Okay, 3,45,000 க்கு year wise split up கொடுத்திருக்காங்க. This belongs to which year? And that year what was the income? It is given. Then slab rate has also been given. In that year what were the slab rates? Now using the slab rates, with arrear you have to calculate the tax, without arrear you have to calculate the tax. Then arrear tax of the current year minus arrear tax of the previous year, the difference will be the relief. One time you please see this question. So in the question ஒரு தடவை பாருங்க, and then அந்த HRA question இருக்குல்ல, first exercise question, அது ஒரு தடவை பாருங்க, and then try to by heart all the formulae. You will be comfortable with salary chapter. இப்போவே பண்ணிட்டீங்கன்னா exam timeல வந்து உங்களுக்கு ரொம்ப ஈஸியா you will be able to attend the question. Now let's meet at 8 o'clock tomorrow. Thank you. Doubts ஏதாவது இருந்துச்சுன்னா கேட்டுக்கலாம்.